is said to earmark £130 billion to contain gas and electricity prices for UK households. Drastic measures. French President Emmanuel Macron backs an EU-wide windfall tax on energy company profits, plus struggling for direction. Yes, stocks and futures waver as European woes weigh on sentiment. The RBA boosts rates to a 7-year high.
Yeah, Tom, that's exactly what the futures are doing. They're kind of struggling for direction. I have to say it's pretty subdued. Yields are rising. So we look at LIBOR at pound yesterday, got a bit of a lift. The troubled pound, we're not talking about a possible IMF bailout. What? I mean, this is like the Deutsche Bank note that's doing the rounds, but futures pretty much kind of flat.
Yeah,
uninspiring.
Uninspiring this Tuesday, unfortunately. But it is that Deutsche Bank note that really stood out, wasn't it, in terms of the potential economic risks and the policy challenges for the incoming Prime Minister, Liz Truss, of course, who surprised many by coming out pretty early with this plan, around £130 billion to shore up households here. And we're waiting for additional details. Boris Johnson gave his departure speech just in the last few minutes. The FTSE 100 currently down about 0.1%. We're watching utilities and their reaction to that plan. No windfall tax so far. She pushed back on that. Instead, a cap, a subsidy for households and those energy businesses. The CAC currently down 0.2%. Over in Spain, losses of 11 points. We can switch on, see how things are playing out. Interesting to see that France and Germany agreeing in terms of energy sharing. France is struggling with its own nuclear power. Germany, of course, the gas crunch, but it has a little bit more electricity, so they're looking to share that energy into the winter months. The futures stateside as they reopen after that Labour Day holiday, pointing to gains now of 0.5% after the losses that we saw on Friday. The pound getting a little bit of a bid again on the back of this Liz Truss plan, gaining 0.6% at 115. It crossed above 116 just in the last few seconds. The US 2-year, 345. Yields are up, so sell-off in bonds, 345 on a US 2-year, and Brent, $95 a barrel. That is down 0.3%. OPEC Plus, though, cutting output by 100,000 barrels a day. Fran.
Tom, the outgoing UK Prime Minister, Boris Johnson, has given his farewell speech in front of number 10 Downing Street, with his successor, Liz Truss, set to speak a little bit later. Well, Johnson vowed to enthusiastically back Truss during her time as Prime Minister.
Let me say that I am now like one of those booster rockets that has fulfilled its function, and I will now be gently re-entering the atmosphere and splashing down invisibly in some remote and obscure corner of the Pacific. And like Cincinnatus, I am returning to my plough, and I will be offering this government nothing but the most fervent support.
OK, let's get a sense from Downing Street then, from Lizzie Burden, who's been outside, of course, the home now of Liz Truss. She'll be moving in shortly. Lizzie, what are the key takeaways then from Boris Johnson's speech?
Well, Tommy was charismatic to the end, even a tribute to Larry the cat, and very optimistic, very supportive of Liz Truss. He offered her nothing but his fervent support, so clearly he's not intending at the moment to be a backseat driver like Margaret Thatcher was to John Major. He emphasised the Conservative manifesto. Truss, of course, may face questions about her mandate, but technically the Conservatives won in 2019, not Johnson, though she has promised a much more radical libertarian agenda than that manifesto. And Johnson also took the opportunity to hammer home what he would like to be seen as his legacy policy, the COVID vaccine, the war in Ukraine, but a very positive message. We would expect nothing else from Boris Johnson to the end.
Yeah, we certainly wouldn't. What can we expect from Liz Truss in terms of plans? So we have this, mega plan on energy prices. Can they calm the markets?
Well, as you mentioned, there's this Deutsche note saying that unless she gets the policy mix right, there will be a crisis for sterling. Truss has let reporters believe that she wants to freeze energy bills on the one hand and then in the longer term fix the energy supply issues facing the UK. If that's not a handout, it's hard to see what is. But economists are saying that it's really unavoidable, even if it's expensive, even if it's poorly targeted, because the energy crisis facing most of UK households this winter will be so painful. But it is worrying if this is the new normal. And you have seen all these moves in gilts and sterling over the summer. There's an interesting note from Julian Jessup, an economist who's thought to be advising Liz Truss overnight, and he blamed those moves on the instability left by the void of the transition period between Johnson and Truss, and he actually said that there will be more resilience in the markets once we have the new Prime Minister, and indeed you did see that little lift to the pound on the news of this freeze in energy bills.
Lizzie, thanks so much. Lizzie Burden there outside number 10 in Downing Street. Let's also now speak to Fleur Anderson, Shadow Cabinet Office Minister for the Opposition Labour Party. Fleur, thank you so much for joining us. On Bloomberg, how long are you expecting Liz Truss to stay in power?
Good morning. Well, let's give her until the next election, and I hope that then we will win in the next election, and the Conservatives will have to go through this whole shenanigans of a leadership challenge again. It's not a great look for the Conservatives. In fact, it's really worrying for the country that we've now got their fourth leader. They're putting a brave face on it today. They're trying to pack outside Downing Street with lots of smiling MPs, but that's really not how the mood of the country is, I think. I think they are worried about this constant change of leadership and chaos in the Tory party.
Okay, Flo, we have this announcement from Liz Truss and her team, around £130 billion to support households. There you go. They're coming out with a big plan. It's going to help households. It's going to freeze energy costs. They are taking a major step forward to addressing the energy crisis and the cost of living crisis.
Oh, finally a plan. That's what we've been really wanting to see all summer. There's been this zombie government not making any decisions. So there's a plan, but who's going to pay for it? Are they going to put all of it onto the taxpayer and we'll be paying for it for years and years, if not generations to come? Or will she actually look at the Labour plan, which makes a lot of sense, and tax the oil and gas giant companies and have a windfall tax? That's what we want to see. Who's going to pay for this? But also, the energy crisis is not the only crisis that Liz Truss needs to step up for. It's the NHS crisis, law and order, antisocial behaviour across the country, and the environment. I haven't heard much about the environment during this leadership campaign, and I'm really concerned about that because, of course, it's all linked up with the energy crisis.
Yeah, if we go back to this draft £130 billion plan to actually freeze UK energy bills, would Labour support that plan?
We support a plan, but it depends who's paying for it. Again, if it's being paid for from a windfall tax, that's absolutely the right thing to do, and it really makes a lot of sense. If we're going to have to be paying for this from tax, which is then going to not be able to be put back into public services and those things that really matter to people across the country, looking at this very worrying winter, not only on our bills, but on the NHS and can it cope, then that's not good enough. No, the Labour plan is saying that it's got to come from a windfall tax and not a huge additional tax burden. We've got to see inflation coming down, and we've got to see sterling being stored up, so that cannot be done through huge additional burdens of tax. That's
Flo, what is the Labour plan?
Said she would do as well in her leadership campaign.
Okay, what is the Labour plan to fix what many would argue is a broken energy market here in the UK?
So there's got to be long-term and short-term conditions put in place. First of all, we've got to look at people's bills, as I've said. That's what's the main concern at the moment, and how we're going to pay for those bills and make sure it's not regressive, it's done fairly, in a way that can be distributed very fast. And that is why just capping people's bills, ensuring they don't pay a penny more, is the best way of doing that, rather than asking people to come and have to apply for that or have vouchers or other kind of schemes. But in the long term, we need to look at how we're going to diversify our sources of energy. Of course, that insulation on housing that Labour keeps on talking about, we would insulate 19 million homes. Even a year ago, if Boris Johnson had cottoned onto this and realised how important it was, we could have insulated 2 million homes in the past year. And that would make a huge difference to people's energy bills, but also to how we use our energy and make the most use of it. So there's a lot that needs to go on there. That's a big question, obviously. But Labour has a plan, and I hope Liz Truss is going to be reading it now as she flies up to Balmoral and comes back today. And I hope that she will be looking at Labour's plan and putting that into action.
Are you surprised that Labour is not further ahead in the opinion polls, given the pretty rough economic situation we're in?
I think we're really far ahead. If we had an election now, we would win. So that would be a great thing, I think, not just for the Labour Party, but for the country, if that happened. So I think Keir Starmer is doing really well. He's got that competency, that principles, the high standards and ability to govern that we have been missing in Boris Johnson's premiership, and we're hoping for in Liz Truss's, but we don't yet know. So obviously the jury's out. We don't know of all those promises she made during the summer, which ones she will keep. We need to see higher standards, and that's what we see from Keir Starmer. That's why we are really very much ahead in the polls, and I hope that we'll see that continuing. I can't see any reason why we wouldn't, because we've got really good common sense policies, and we're on the side of working families in a way that Liz Truss has not proved in this leadership election that she is.
Yeah, Fleur, thanks so much. I think, 10 points ahead is something that, some people were expecting it to be more. Fleur Anderson, the shadow cabinet office minister there for the office.
I'm looking forward to the first PMQs between Keir Starmer and Liz Truss. That will be interesting to see how those two spar together, of course, in the chambers of Westminster. Right, we will be continuing the conversation about the UK's future. Many would argue it's pretty perilous under a Liz Truss premiership throughout the morning. Later, we're going to be speaking with former UK Chancellor Philip Hammond. Stay with us for that interview. It's going to be around 8:30 a.m. UK time.
Coming up, drastic times call for drastic measures. EU governments race to avoid an energy catastrophe with multiple plans. More on that next, and this is Bloomberg.
Is it possible the industry is in an arms race that will lead to spending itself into an oversupply? I mean, that has happened before.
We've looked at this very carefully, and the digitization of everything. Tell me what aspect of your life, Emily, isn't becoming more digital?
Well, I'm trying to prevent that, but yes, I think it's happening.
And COVID has accelerated that. The industry cost $500 billion last year, the semiconductor industry overall, and estimates are $1 trillion, a doubling by the end of the decade at that point. I believe those estimates. It's not that there's not going to be some blips and turns on the way, and the majority of that is driven by leadership process technology, of which only 3 companies can satisfy that need.
Talk about the future of the entertainment business. Where do you think it's going? Do you think there's going to be movie theaters forever?
Anybody that says to you, and I won't name names, that says the movie business is over, are fools.
Welcome back to the Open. 13 minutes into your European trading day. Gains of around 0.5% across the benchmark. A headline crossing right now. The President, Joe Biden, the administration, they're releasing plans for a $50 billion investment in chips. So the Department of Commerce on Tuesday, this is according to the New York Times, unveiling its plan for dispensing $50 billion aimed at building up the domestic semiconductor industry and countering China. That line just crossing the terminal from the New York Times. Francine.
Now, European governments are also racing to stave off an energy catastrophe this winter. Germany plans to keep 2 of its 3 nuclear plants on standby in case of a power shortfall. Now, energy ministers will call for coordinated power demand reductions, but also emergency liquidity tools when they meet on Friday. And the French President, Emmanuel Macron, is backing an EU-wide windfall tax on profits for energy companies.
Si la Commission venait à décider de mettre un plafond au prix du gaz.
We support a European mechanism which we act from the European energy operators whose production costs are far lower than market sale prices. This is the approach that France supports and supports that France and Germany support. It's the most coherent to fight against the disruption at the EU level.
Okay, that was, of course, the French President, Emmanuel Macron. Joining us now is Seema Shah, Chief Strategist at Principal Global Investors. Seema, thank you for joining us this morning. You say the stars are aligned for the perfect market storm. Where does the energy crisis sit in that market storm?
Yeah, thanks for having me on. Unfortunately, it's very much near the top. The global economy, particularly the European economy, is really faced with a number of very, very difficult challenges, of which energy is unfortunately sitting right at the heart of everything. And it does unfortunately mean that Europe, despite all of the, I think, very impressive help actually that governments in Europe are trying to provide for families and businesses, it's simply not going to be enough to stave off a pretty significant downturn. I think a lot of question marks lie around how the ECB is going to be aiding this or maybe potentially making things more difficult. So there are a lot of challenges ahead of Europe.
What challenge? I mean, how tough will the challenges be, Seema? We're now possibly talking, this is for the UK, but I don't know how ugly it becomes once we have the second and third round effects. Are markets already pricing any of that in?
It's a great question because, look, I think the fundamentals are particularly dire for Europe and for the United Kingdom. But what we are seeing is that analysts have become very, very bearish in their own expectations. So a lot of these concerns are now increasingly priced into the market. And you can see that with valuations across Europe, across the UK, very much near historic lows. They're kind of some of the cheapest markets we've seen for several decades. So at this point, actually, we think that a lot of the sentiment is so negative that we wonder how much worse from a market perspective things can get for Europe.
Seema, we're obviously focused on what's happening in the UK today, the announcement of around £130 billion to cap prices, energy prices here from the incoming Prime Minister, Liz Truss. What is your assessment? Is this a risk to the balance of payments? Is this shoring up a potential currency crisis for the UK? Or is it fiscal relief? We're seeing the pound strengthening on the back of this news.
So I think that what we're seeing today with the discussion around what the Liz Truss government is going to be doing, I think it's testament to the very, very difficult situation that the UK and other countries, of course, are finding themselves in. Of course, they need fiscal stimulus. Without fiscal stimulus, the UK would be heading to the kind of economic scenario that the Bank of England had played out in their most recent forecast. So the fiscal stimulus is important, it's necessary, but unfortunately, it does mean that later down the line, you could be looking at something of a crisis when it comes to your balance of payments. So I think at the moment, yes, you could see a snap up in sterling as maybe the economic scenario looks a little bit less negative than had been expected. But unfortunately, you look out maybe a year or two down the line, and I think that we could be looking at renewed weakness in sterling.
But Seema, you say you're very diplomatic, something of a crisis. I mean, are we talking about the crisis on the scale that Deutsche Bank is putting in their notes that would also involve the IMF needing to step in?
I think it's possible the IMF might step into a number of countries at the moment. We are going to have a government buffers being dissipated significantly as governments step in to try and help out households. Now, whether or not it gets to quite the point that Deutsche Bank is suggesting, I think we could get close to a situation where the UK does look increasingly like the least attractive economy in global markets, certainly in developed markets. But that could be a year or so away once you get past the kind of the fiscal stimulus surge in economic growth, and then you're left with the bill that has to be paid out by households, and then of course the balance of payment crisis that would come to fruition at that point.
Okay, the least attractive market within global markets, developed market within global markets. Seema, what is the defensive play then in this environment?
Yeah, it's a very, very difficult market. So like from a global perspective, if you're able to invest outside of Europe and the UK, actually, we still have a preference for the US. We think the US market is also going to be under significant pressures, but nothing like what you're seeing for Europe and the UK. So that would be one thing. But also, as we look across all markets, you have to think that look, the next year, potentially a couple of years, is going to be an inflationary period. And this is really, again, when real assets will continue to outperform that time to invest in real assets. It hasn't passed. We still have opportunities ahead of us. We tend to like stuff like listed infrastructure, which is typically quite stable income streams, revenues, even through these very challenging economic times when inflation is a little bit higher. So I think we have to start searching out opportunities, but unfortunately, it is a particularly difficult time.
Seema, particularly difficult. Are we actually talking about many businesses, like 20% of businesses going under in the UK, but also in Germany and countries that are very close to Russia?
I think it's a possibility. Look, it really depends on what governments are willing to do. And then I think that goes back to, look, this is a predicament. We know that tax cuts, any kind of fiscal stimulus will have to be paid back by households in the future. We know that, but this is something that governments need to do. So hopefully, with sufficient intervention, of course, who knows what happens with regards to the weather this winter in Europe, a lot of this is going to play into it. So there are some scenarios where maybe it won't be as negative as that, but I think that is a scenario that businesses have to be considerate of, or certainly investors have to be considerate of, that is a potential for that 20% number that you just named.
Seema, thanks so much. Seema Shah, their chief strategist at Principal Global Investors. Now, coming up, Volkswagen driving ahead with its plans to list a minority stake in Porsche. Maybe that's seen as a bit of good news in all this doom and gloom, and that's despite the market turmoil that we could see. That's coming up next, and this is Bloomberg.
When I started, I had no idea it was going to turn into this, which is a tracksuit empire. I don't have any investors. All this is all money in. This is me going out and hustling, bringing that money back, and just building it, building it, building it. You gotta think about a person that was homeless at one point, didn't really have any money coming in. The fact that this person was relentless and just determined to succeed and not let rock bottom define him as an individual. I can take things and put them together and take them apart and make them better and put them back together. I respect the craft, so I don't want to minimize and disrespect the value of each step of the craft and do by machine what should be done by hand.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
From the world of politics to the world of business. Balance of Power with David Weston. News, analysis, insight from and about politics power players. Weekdays. This is Bloomberg.
Welcome back to the Open, everyone. 23 minutes into the European trading day. Look at that. We have a little bit of green. We'll take it. Any good news? We're absolutely for it. European stocks are rising. U.S. futures are also rising, and the pound is actually having a bit of a lift-off, a bit of a rebound. There you go.
I've got some more good news.
Happy Tuesday.
Some earnings beat. There we go. We're looking for any little shades, threads of optimism in these markets, and of course across the stories as well. In terms of the corporate stories that we're looking at, Ashtead, which is a provider of services within the real estate business and sector here in the UK, was a beat on earnings for the first quarter. It beat the average analyst estimate. Despite that, okay, so much for the good news, down 1.6% despite that beat on earnings. Okay, Centrica rallying 2.5%. This is on the back of Liz Truss's plans around a cap on energy prices, putting something of a safety net around the utility and energy providers. Centrica, of course, the owner of British Gas. And then last but not least, we're going to break this story down with the brilliant Craig Trudell shortly. Volkswagen gaining almost 3%. They are going to be launching their IPO for Porsche at some point between the end of September, early October, with a valuation of around $85 billion US dollars. Could be one of the biggest IPOs of the year. On that story, let's bring in then global car czar Craig Trudell. Craig, what is behind the push? The board met yesterday. They made the decision, despite all the market volatility, to push ahead with this IPO.
They're still giving themselves a little bit of an out, right? They're talking about this is still subject to market developments, but absolutely they're pushing ahead with this, and this was a significant step, a procedural step toward this deal. I think it's absolutely something that they want to do before the end of the year. It is a bit surprising, just given all that we're seeing with you know the inflation, the energy crisis that we're seeing here in Europe. But Oliver Blume just did a call with reporters. He emphasized what Porsche was able to do through the COVID lockdowns, through the semiconductor crisis that's been hitting the auto industry so hard. Porsche's been able to sort of rise above that and sort of pointed to this ability for this brand to really sort of get through really tough times and put emphasis on that as a reason to push ahead with this.
Yeah, so this, I mean, of course, it's to try and unlock some of the value. What's the relationship going to be like between Porsche and VW? Juicy.
This will go from a domination agreement to a cooperation agreement. I mean, it's really interesting. Juicy is a perfect word for it. This is a case where Porsche tried to take over Volkswagen 12 or 13 years ago. The tables turned, and this is a sort of reversal of that, where now Porsche's getting some measure of independence again. The Porsche and Piëch family are again sort of having more direct control. But this is absolutely going to be a case where Porsche is going to rely on Volkswagen to a degree, and it is going to be the case that Volkswagen gets something out of this deal as well. They get a little bit more flexibility and some funds to put to use with their transformation.
All right, Craig, thanks so much. Craig Trudell there, our global car czar. Coming up, drastic times call for drastic measures while EU governments race to avoid an energy catastrophe with more. nurturing also can come from men, and it's one of the qualities, I guess, that you found in your mentors that also pushed you up. Do we need even more nurturing post-pandemic? Is the way that we talk with employees going to change?
I think talent becomes the single biggest differentiator of a successful entity versus an unsuccessful entity. So you've got to do everything possible to hire, train, retain, put your arms around talent. I mean, you really got to focus on your talent. In the past, it's always been give them money, show them that they have an upward mobility and can make even more money, and that's the only reason people come to work. I think post-pandemic, we are seeing more and more people say, I have to worry about me as a person. I have to worry about my family. I want to worry about my well-being, my mental health. So we've got to start encompassing people as holistic humans as opposed to a tool of the trade, which means that we have to engage with them head, heart, and hands, not just head and hands. The heart has to be engaged. So we have to show more empathy, show that we care, that they're citizens of the community, they're members of the family, and all of those have to come into consideration as we help an executive or an employee be an employee and be a person of the community and the family. The stakes are higher.
Welcome back to The Open, everyone. 30 minutes into the European trading day, and here are your top stories. Relief plan. Incoming Prime Minister Liz Truss is set to earmark £130 billion to contain gas and electricity prices for UK households. Drastic measures. The French President Emmanuel Macron backs an EU-wide windfall tax on energy company profits. Plus, green shoots. Will stocks move to the green despite European troubles weighing on sentiment? The RBA boosts rates to a 7-year high. Tom, I like the way we talk about European troubles, but actually, I mean, inflation, we're talking about a possible IMF bailout. That's certainly what Deutsche Bank had in their note. Inflation running at 20%, concerns about taxes. I mean, it's not looking great overall, but the markets are kind of taking in their stride.
It's pretty stark, isn't it? But nonetheless, as you say, the FTSE 100 turning around up 0.4%. Utilities are part of the mix there because they're being ring-fenced by this plan by the incoming Prime Minister Liz Truss, who's going to be supporting households, but also so far has not committed to any kind of windfall tax. And in fact, she's pushed back against that. So utilities are rallying on the back of the fact that energy prices will be capped for households. They'll still be able to generate those huge profits. The FTSE 100 up 33 points, 0.5%. Over in Germany, the automakers have been under pressure over the last few days as we've adjusted to that energy shock out of Russia. But today, the auto sector is back. Volkswagen is part of the mix there with its plan for the IPO of Porsche, potentially at the end of September, early October. Valuation around $85 billion US. A gain of 0.9% for the German benchmark. Across the European space, you're seeing gains then of 0.6%. Let's break it down and see how things are playing then, sector by sector. Also worth considering what's happening in the energy space, of course, on a daily basis, on an hourly basis. But we had OPEC Plus and the decision there to cut output. That was a factor around oil prices. But oil prices kind of came off a little bit in the last few hours. Currently, energy is down 0.8%. Top of the list then, retail, travel and leisure, and as I said, auto parts up almost 2%. Francie?
Yeah, there you go. Retail's not doing too badly. European governments racing to stave off an energy catastrophe this winter. In fact, Germany plans to keep 2 of its 3 nuclear plants on standby in case of a power shortfall. Now, energy ministers will call for coordinated power demand reductions and emergency liquidity tools when they meet on Friday. Now, the French President Emmanuel Macron is backing an EU-wide windfall tax on profits of energy companies.
Si la Commission venait à décider de mettre un plafond au prix du gaz,
we support a European mechanism which we act from European energy operators whose production costs are far lower than market sale prices. This is the approach that France supports and it's the approach that France and Germany support. It's the most coherent to fight against the disruption at the EU level.
Okay, for more, we are joined by Anthony Di Paola, our energy reporter out of Dubai. Anthony, what measures then are European countries and the EU, officials in Brussels, are considering to battle this energy crisis? What do we know at this point about the plans?
Tom, they are looking at a lot of these fiscal measures, as you discussed in the run-up. That would be something like a windfall profits tax, which we're seeing a lot of countries propose now based on the high cost of energy and the big profits that some of these energy companies are making, as well as some direct aid to consumers. So these are fiscal issues, but they really need to impact the demand and the supply, because it's really the supply that's lacking. We're not getting that gas coming through the Nord Stream pipeline from Russia, and so we need that supply coming into Europe. European countries are looking for other supplies. LNG prices there have risen. Coal prices have risen. As you mentioned, some countries are looking at keeping nuclear plants on. So they're looking at those different supply issues, and then they've got to look at demand in terms of bringing potentially some industrial consumers that can shed load off of the grid during the winter months. Yeah. Also getting consumers to save some of that energy. So these kind of measures have to affect all parts of those issues, Tom and Francine.
Yeah, Anthony, I'm a little bit confused of why you do it at the European level instead of doing it country by country, right? We know that France is looking at that, and they're trying to tell their guys, look, be careful, use less energy, although they have nuclear, that Germany is also looking at possible blackouts. Does it make more sense? Do you have more power if you do it from Brussels?
Yeah, well, Macron talking about an EU-wide tax is kind of opens up a whole other can of worms for the European Union, because that has been one of the contentious issues throughout EU history is the taxation, that the countries have maintained that. But there's been kind of this attitude that countries need to help each other out in terms of sharing power across borders. That only goes so far, though, when there's simply not enough power to go around. So countries can coordinate with gas supplies across borders. They can ship power across borders, but if there's not enough, it just won't stretch. One thing that they are talking about as well on an EU-wide basis is a price cap in terms of buying gas from Russia. That's also been mooted by the G7 just this week about buying oil from Russia. So they would try to set up some mechanisms whereby they would keep some of that Russian energy flowing, but at a lower price, thinking that Russia would rather sell energy and bring some money in than get nothing. Of course, at the moment, we've got no gas coming in from Russia, and that still remains to be seen whether that is going to start up at all.
Okay, after the almost 30% drop we saw in Dutch gas prices yesterday, they're coming off now around 13%. Anthony Di Paola, our energy reporter in Dubai, getting us up to speed on how officials in Europe are trying to address this issue. Let's get the impact across the FX space now, discuss the currency crisis that is potentially facing the UK, but also, of course, the impact across the Eurozone. Joining us now is Themos Theotakis, Global Head of FX at Barclays. Themos, there's a lot to talk about when it comes to FX, but we'll start with the euro. Are we closer, as officials build out this plan to try and protect their economies from this energy crisis, are we closer to delinking the euro from gas prices and getting it back to fundamentals?
Not really. And what I would say is that the move in natural gas prices is a fundamental driver for the euro. Consider a shock that makes you less competitive because your cost structure increases. You need an offset. And a weaker euro makes everyone else's products equally expensive as yours, at least for the internal market, but also you can actually make the argument that for global markets too. So in many ways, the euro drop has been a release versus that terms of trade shock as it's known. And what I would say is actually in our estimates, half of the euro drop since February, a 6% drop, is directly linked to the natural gas price. I think the main question is, will this story extend to as big of a degree as it has so far, or is a lot in the price?
Right, and that's the million-dollar question, which I know you'll answer in a second, but there's also growing expectations that the ECB will raise interest rates by 75 basis points. I mean, this is problematic, basically raising to deal with inflation in a looming recession.
Yes, it is. And in many ways, what we think as a house is that in the near term, and as long as the recessionary effects are still, in question or not extremely visible, they have no option but to follow the pressure that's coming to them by the Fed hikes, etc. But next year, probably they'll have to disappoint expectations from the market because the economy will probably be in a much worse state than it is now.
Let's get your views on the pound then. Do you buy the pound at these levels? Almost 116, 115.92. A bit of a bid on the back of this news from Liz Truss and her plans around energy. Is this the bottom for the pound? Do you want to be in?
No, I don't think so. I'm not extremely pessimistic in the sense that I think that quite a few items have actually been priced, but I do think that there are additional things that are coming to us, not just for the pound, but also for the euro. And my main focus, which is not part of this discussion, is the slowdown in China, which will probably continue to exert additional pressure to what's going on now in two very, open and very, hurt economies.
What's the next level you're looking at, you're watching for sterling?
I think that, when you look at, sterling against the dollar, you're looking at the next 5 big figures down. And when you're looking against sterling against the euro, you're looking at an exchange rate that's remarkably stable. So for me, what is more interesting is whether sterling will depreciate against the euro, something which it hasn't done so far this year. Very stable against the euro.
Yeah, but there's so much concern about a balance of payment for the UK. And there's now also possible talk about the IMF, having to step in at some point to save a G7 country.
I've gone down that rabbit hole during the Brexit period myself, looking at the balance of payments of the UK. The balance of payments of the UK is something which is very flexible. It's something which has a lot of financial flows in it. It didn't drive the currency to the degree that I was expecting at a time of more intense pressure and a very large balance of payments deficit.
Sorry, even with the 20% possible inflation next year?
Yeah. I think that this is a problem that is, not UK specific. It's a shock that the UK is experiencing globally, and the market is treating it as such so far.
Okay, you touched on China. 10 straight days where the fixing has come in stronger than expected. What does that tell us about how confident or to what extent officials in Beijing are prepared to go to shore up that currency?
I think what it tells you is that they have every tool in their power to control the pace and to deal with any kind of speculative activity. But the currency is very expensive, and this is the weakest I have seen the economy in years. It doesn't make sense for the currency to be so strong versus anything else at a time of such a severe slowdown, driven also by their own policies.
All right, Demos, as always, thanks so much for coming on. Demos Fiatakis there, Global Head of FX at Barclays. Coming up with the UK set to get its 4th Prime Minister in 6 years. Later today, we speak to the former Chancellor of the Exchequer, Philip Hammond. That's an interview you don't want to miss. He's coming up next, and this is Bloomberg.
COVID has changed everything. People are changing the way they work and the way they travel. Can you explain what you mean?
I think the world is never going back to the way it was fully before the pandemic. And one of the changes, I think, David, has been a change in how we work. Many people had a job at an office. They're not going to be required to come back to the office 5 days a week. And I don't think CEOs per se are going to determine these policies. I think workers will, because all of us CEOs, I think, want the best talent. And I think flexibility is going to be the second most important benefit after compensation. All of this, David, has culminated in Airbnb not just being a company about traveling, but now a company about living. So there's this whole new category of travel that's not classic 2-3 nights in a city. It's not long-term housing, and it's completely emerged because of the pandemic.
The difference between endless research and a winning strategy. To improve your firm's productivity and profitability, Bloomberg Law combines the latest in AI-powered tools and in-depth analysis to accelerate the research process. To grow your practice and make better use of your valuable time. The difference is Bloomberg Law.
When you've had your fill of IPOs, ETFs, and CPI,
tune into the lineup for some NFL, NBA, and MLB. Did you retire too early? I mean, look at some of these payouts.
I absolutely retired too early.
For the inside scoop on sports betting, catch the lineup right here on Bloomberg.
Happy Tuesday. Welcome back to the Open. We are 43 minutes into the European trading day. You're actually seeing gains across the European benchmark, around 0.5%. Here in the UK, the FTSE 100 currently up 27 points, up 0.4%, trading at 7,315 as investors digest that plan by the incoming Prime Minister Liz Truss for a cap on energy prices and about £130 billion worth of spending. Francine.
Now, this is the state of play. We talk, of course, about the UK. We talk about the spending plan, energy. This is the movers. I know we were talking a little bit about Ashtead and Volkswagen and Centrica, which Tom was talking about. It's a big day for UK politics. Boris Johnson left Downing Street to make way for Liz Truss. That's as she takes over as Prime Minister. She flies to Scotland, Balmoral, a little bit later, and we found out that actually because of rules, they can't travel together. So they're taking two separate planes, as Boris Johnson will also travel to Balmoral. Now, Johnson vowed to enthusiastically back Liz Truss during her time as Prime Minister.
Let me say that I am now like one of those booster rockets that has fulfilled its function, and I will now be gently re-entering the atmosphere and splashing down invisibly in some remote and obscure corner of the Pacific. And like Cincinnatus, I am returning to my plough. And I will be offering this government nothing but the most fervent support.
Okay, let's bring in Bloomberg's Lizzie Burden, who has been outside Downing Street since the early hours of this morning for us. Lizzie, the key takeaways for you then from Johnson's speech?
Well, I have to note that having done a little bit of classical research, Cincinnatus may have returned to his plough, but after being a successful general, he did actually make a comeback. So I wonder at what point in Cincinnatus's personal history Boris Johnson was thinking of. He did offer Liz Truss his fervent support, and he acknowledged that yes, there are economic headwinds, but he was very optimistic about how the UK under her leadership would be able to survive, and so it seems that he's not going to be a backseat driver from the backbenches for now, at least. Remember, Margaret Thatcher was such a thorn in John Major's side. He also emphasised the Conservative manifesto from 2019, so creating this message of continuity, because it's that Truss is going to have to rely on for her mandate. Remember, the Conservatives were elected in 2019, not Boris Johnson. But of course, she's promised a much more libertarian, radical agenda than that manifesto. But really, Johnson also taking the opportunity to hammer home what he would like to be his legacy on the COVID vaccine and on the war in Ukraine.
Lizzie, thanks so much. Lizzie's sticking with us. We're also welcoming the former UK Chancellor of the Exchequer, now member of the House of Lords. He's Philip Hammond. Thank you so much for joining us, Mr. Hammond. I mean, there's so much to talk about, but let's start maybe with this energy bill that we heard from Liz Truss drafting. £130 billion is what it's worth, but she's still cutting taxes. Will she be able to go ahead with this?
Well, I'm sceptical about whether we've got room for big increases in spending and tax cuts. Remember, we're battling inflation here, and this looks like a big stimulus at a time when the Bank of England is trying to dampen inflation. To me, it makes no sense at all to have Threadneedle Street doing one thing and Horse Guards Road, the Treasury, doing the opposite thing. That just implies that we'll end up with higher interest rates, bigger debt, and slower growth than we might otherwise have had. So I do think it's very important that there's a coordination at a time like this between monetary and fiscal policy. But that said, it's clear that the government has to do something about the element of the energy price spike, which is short term. Now, the challenge, of course, is that right now, we don't know how much of this surge in energy prices is short term, Ukraine war related, and how much, if any, is structural and longer term. But the bit that's short term, we have to help people with, provided it is only short term. But we also need to be honest and explain to people that in the long run, the government cannot pay their energy bills for them. The government can't protect them from global markets in the long run.
And that's, you're seeing that response in the markets today, the likes of Centrica rallying on the back of the fact that essentially they're protected by this plan. There is as yet no windfall tax. Is it morally right? Is it practically right to draw a line around the energy companies and provide that subsidy for households and ensure that energy price cap? Or does there need to be a windfall tax at some point?
Well, look, I'm instinctively opposed to windfall taxes. I think if there is a genuine and persistent element of windfall, it can be justified to tax that unwarranted gain. But I think the important thing to remember about the energy sector is that it is highly cyclical. Just because companies make big profits in some years doesn't mean those are windfalls. These are companies that also will make big losses in other years. But if there is a persistent, long-run, unwarranted super return, then yeah, I think in those circumstances it would be reasonable to look at some element of windfall tax.
But people are still going to face massively increased energy bills this winter. Will this be enough to satisfy the public?
Well, look, what the public would like, I'm sure, is for the government to magic away the problem of higher global energy prices. But we do, I think, have to get people back into the real world post-COVID and a reminder that the government cannot solve every problem, does not have a bottomless pit of money. And I think that Liz Truss, by instinct, will be in that place. She will want to provide support and help to people where it's sensible to do so, where they're facing a short-term challenge. But I think she will also want to be honest and upfront with people that in the long run, we are exposed to global markets. We're a very open economy. And in the long run, the only way to protect our standard of living, protect people's welfare, is to ensure higher levels of productivity and strong economic growth. And I think once she's got over this very short-term step of announcing emergency measures around energy prices, she will then, I'm sure, want to move on to emphasize a medium and long-term economic plan, setting out what Britain's future path looks like post-Brexit, post-COVID, post-cost of living crisis. How does Britain earn its living in the world? How do we protect the living standards of our people? How do we ensure that as a medium-sized nation, outside of any large bloc, we are able to still count for something in the 21st century?
And talking about our exposure in markets, the pound's had a terrible summer. Analysts are talking about possible parity with the dollar. What should the Bank of England and the Treasury do?
Well, the Bank of England and the Treasury are both facing a very big challenge, of course, in trying to combat inflation while also avoiding creating a recession or a bigger recession, deeper recession than we need to have. But I do think it's a salutary reminder to the new Prime Minister on her first day in office that the markets are watching. And probably more so than at any time since the referendum in 2016, the markets are looking very, very closely at political pronouncements. And the UK does face some serious headwinds. We've got a big balance of payments challenge. The pound has had a pretty tough time over the last 6 months. And I think there's a very strong need for the government to provide not only reassurance to its citizens that it will provide short-term help to get through this winter, but to markets that it does get the fact that it can't keep on printing money to bail out, bail people out from these challenges that we face. If the terms of trade have shifted against us, and to some extent they may have, then that's something that we have to deal with. That's a structural problem. We can't just solve that by borrowing money and handing it out to people.
I mean, we had this pretty scathing note from Deutsche Bank, even talking about a possible IMF intervention because of the balance of payments. I know this is not maybe for something for now, but 18 months, could we actually see an IMF bailout for a G7 country, that is the UK?
Yeah, well, I think we're a long way away from that kind of intervention yet. But again, I don't think it's unhelpful that people who are active players in the markets are sending these warning shots. I think our political leaders can avoid that kind of extreme outcome. But the UK economy is perhaps more fragile than many UK citizens understand. It's essential that we have a plan now to go forward. There is a sense that we've been kind of drifting a bit over the last couple of years. And I'm sure that Liz Truss, who I've worked with very closely when I was Chancellor, I know that she's a person who thinks about this kind of thing. I'm sure that she will want to set out a pretty comprehensive plan for her vision of the future of Britain as we come out of this crisis next year, and how we move forward, how we make Britain a success in the future. But it isn't going to just happen. It's going to have to be made to happen.
I wanted to get your views on a particular sector, because tax cuts, of course, are something that Liz Truss has been very vocal on, and the corporation tax. But more broadly, when it comes to the banking sector, there is a potential cut to banking sector corporate taxes in the offing. Would that be the right step in this environment, to cut the corporation tax for the banking sector?
Look, I'm personally, much as I would love to see lower taxes, I'd love to see lower corporate taxes, I'd love to see lower personal taxes, I am not convinced that corporate decisions will primarily be made around the level of corporate taxes. And far more important than the headline rate are the incentive regimes around investment in R&D, for example, and the general tone of the economy, the general mood, and how hospitable the ecosystem looks to business. I think that's the very clearly important thing that we have to do, is get a message out there that Britain is genuinely open for business, not just rhetoric. To be honest, we've had rhetoric about Britain being open for business for years, but the reality is, post-COVID, the country is snarled in red tape, bureaucratic structures that aren't working properly, regulations that have become restrictive just because we can't get through them, we can't get through processes quickly enough. We've got to get this country functioning the way it used to, and the way we used to pride ourselves, that it was an easy place to start a business, to grow a business, to an easy regulatory environment to navigate. And I think we've lost some of that, and that's where we need to go. By the way, that's where Liz Truss's instinct will be.
I was going to ask, because you know her personally, it's very difficult, though, to do a U-turn on the tax cuts, given she's promised it over and over in the campaign. So what do you think she'll do in the next 2 months?
Well, we'll see. There'll be an emergency statement, and we'll see exactly how she's going to handle this. I think in the short term, we have to expect substantially more borrowing. But I think the important thing is what she sets out as a medium-term agenda here.
Just very briefly, do you think Boris Johnson comes back?
No. I hope that his splashdown in the Pacific that he talked about was sending a clear signal that he isn't going to return. I heard Liz's comment about Cincinnatus. I hope there wasn't a coded message in there. I think we need, everybody needs to move on. This has been a difficult period. Boris will have a fantastically successful future career. He's a brilliant wordsmith. He's a great entertainer. I see a great career ahead for him, but I hope it's not in Downing Street.
What on the speaking maybe circuit in the U.S.?
Sure.
All right.
Absolutely.
Former UK Chancellor, thank you so much for joining us, Philip Hammond, and of course, thank you to Lizzie, who's been at Downing Street today. Now, let's look at maybe some of the stocks on the
just
move.
very briefly, just letting you know that the benchmark European stock gauge currently up 0.3%, and a couple of individual movers, including Ashtead, which beat on earnings. This is a company that rents out construction and industrial equipment. Currently down, though, 3% on the back of that news. Centrica boosted by those plans around energy from Liz Truss, up 2.3%, and Volkswagen on that IPO for Porsche. Plenty more coming up, including surveillance early edition. Stay with us. This is Bloomberg.
China's appetite for energy is enormous. The country consumes about a quarter of the world's energy supply, 35% more than the US annually. Its energy needs have more than tripled since the year 2000. That consumption has helped to fuel astonishing growth, but it's come at a cost.
China is the world's largest greenhouse gas emitter. There is no way to tackle climate change unless China reduces its emissions to net zero.
The country's reliance on fossil fuels is also a hindrance to its own growth and the well-being of its citizens.
China is not energy secure. It has a massive import bill for things like oil and gas. It has a long-standing pollution problem, and it is also prone to outages that severely hamper industry.
All this has led the world's biggest polluter to take steps towards a radical transformation.
To the world of business. Balance of Power with David Weston. News, analysis, insight from and about politics power players. Weekdays. This is Bloomberg.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan. We did see some pressure on the futures. That is now being reversed.
I will deliver on the energy crisis, dealing with people's energy bills, but also dealing with the long-term issues we have on energy supply.
The best case for consumers at the moment is really sad to say, is pulling back on consumption, conserving. They're doing it because high prices tend to do that. But there's no way that there can be a replacement of the lost Russian gas in Europe.
We just don't have any good intelligence as to how well Europe is prepared for it. We see all the data, we see the forward costs on megawatt hours, we see the supposed storage data, but nobody really knows how bad the winter's going to be, how tight things are going to get.
This is Bloomberg Surveillance, early edition with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London, and here's what's coming up on today's program. Relief plan. Incoming Prime Minister Liz Truss is set to earmark £130 billion to contain gas and electricity prices for UK households. Well, crude dynamics, OPEC Plus announced a modest cut in production, but a Monday rally actually fizzles as China's lockdowns renewed concern about demand. Plus, private warnings, Russia risks deep and prolonged economic damage as the impact of sanctions spreads. That's according to an internal government report, and we speak with Ukraine's Prime Minister. Now, this is the breaking news. Of course, Liz Truss traveling to Balmoral, separate planes, but Mr. Boris Johnson, who also gave his goodbye speech this morning, will also travel to meet the Queen as Liz Truss takes over. Now, Liz Truss planning a £40 billion energy aid package for UK businesses. That headline just crossing the Bloomberg terminal. Of course, we'll try and make sense. Everyone wants to know. And it's interesting to hear Philip Hammond, the former Chancellor of the Exchequer, saying now is the time for markets to hold, of course, the new government's feet to the fire is how they will fund it. Now, this is what the markets are telling us. European stocks getting some 0.3%. We're also seeing a bit of a lift when it comes to U.S. futures. Now, I have to say what investors are worried about is the same old story. Inflation, rising interest rates, but they're also trying to assess responses from the Commission, from the EU on how to deal with this energy crisis and whether they'll give enough support to households, but also businesses. Euro dollar, 99.70. If you look at sterling, 115.77, and then the U.S. 10-year yield, 325.57. We've seen those yields rising actually over the last 12 hours or so. This is a picture for European stocks. Now, if you're here in the U.K., all eyes not only on this energy bill and how much support she'll give to households. We haven't actually heard what the new Prime Minister will do for businesses, but the U.K. getting 0.3%, actually pretty similar mood also for the DAX and the CAC. It's a big day, we know, for U.K. politics. Boris Johnson has left Downing Street Street to make way for Liz Truss to take over following her victory over rival former Chancellor Rishi Sunak. Now, in his final speech as Prime Minister, Johnson vowed to enthusiastically back Truss during her time as Prime Minister.
Let me say that I am now like one of those booster rockets that has fulfilled its function, and I will now be gently re-entering the atmosphere and splashing down invisibly in some remote and obscure corner of the Pacific. And like Cincinnatus, I am returning to my plough, and I will be offering this government nothing but the most fervent support.
Let's bring in Bloomberg's Lizzie Burden, who's at Downing Street. Lizzie, we had that breaking news, of course, and I have to correct myself because Liz Truss, that £40 billion energy aid package is actually for UK business. So that's new. Yesterday, we heard more about the households. But is Boris Johnson now retreating? I mean, there's a lot of talk about him wanting to make a comeback.
Well, Philip Hammond didn't seem to think that Boris Johnson was going to make a comeback. I wonder whether that was a hopeful comment. Boris Johnson said that he offered Liz Truss nothing but his fervent support, but he also made a reference to Cincinnatus, who I would note was a successful Roman general who retired, made a comeback, and then went back to his plough. So I wonder at what stage of Cincinnatus's life Boris Johnson was referring to. Johnson did acknowledge the economic headwinds facing the UK, but he said that he was very confident in Liz Truss's ability to handle the economic crisis and the UK's ability. And he also reinforced the message of the Conservative manifesto, because, of course, that's what Liz Truss's authority comes from the 2019 election. It was the Conservatives that were elected, not Boris Johnson personally. So for now, it looks like he's not going to be a thorn in her side.
Yeah, and I'm not sure what the markets are making, actually, of Liz Truss, whether they're calm because they believe in her plan or they're just waiting for the details of how she's going to fund all of this.
Yeah, there was an interesting note overnight from Julian Jessup, who's thought to be giving his economic advice to Liz Truss. He said that the crisis in gilt and sterling over the summer has been more to do with the instability left by the vacuum of power in the transition period between Johnson and Truss, and that you did see this little uplift in the pound because of the announcement on, well, the reports about the freeze and energy bills from Truss. But really, big questions remain around this energy package. Will it be targeted enough? It's going to be expensive. How much will it mean for borrowing? Politically, how will it go down? You know, Truss throughout the campaign has expressed that she prefers tax cuts to handouts. But will this be received as a handout by the Tory core who've just chosen her?
So who are we expecting Truss to appoint to her cabinet, Lizzie?
Kwasi Kwarteng is expected to be her chancellor. He's part of the Greenwich set that will dominate this cabinet. Also, Jacob Rees-Mogg, the current Brexit Opportunities Minister, expected to be at business, which would mean that he would have lots of responsibility for energy. We're also expecting, notably, the three great officers of state, apart from Kwasi Kwarteng, to be held by non-white males. It won't all be held by white males for the first time in history. So we're expecting Suella Braverman and James Cleverly as well in those top positions.
Lizzie, thanks so much. Lizzie Burden there outside 10 Downing Street for us. Now joining us to talk about the market reaction is Scott Thiel, Chief Fixed Income Strategist at BlackRock. Scott, I have 1,000,001 questions on the UK. First of all, there's this really ugly note, okay, by Deutsche Bank saying, look, if you look at the balance of payments, then we could actually see, you know, the only way to deal with it is a 30% devaluation in pound, which is pretty big, and we could see the IMF step in.
Well, I mean, I think that's a little bit extreme, but let's just take a deep breath and take a step back for 1 second.
Okay, yoga.
Deep breath. Yeah, we're going to do our yoga again as we did before. I mean, I think currencies, first of all, are a very good barometer over the very short term of kind of how the market is judging this. And there's obviously a very complex instrument. But I think the currency is reacting to a couple of things. One is, well, there's some certainty finally, right? So we actually know who's the prime minister, but also that they're going to get down to business. And I think that's very important to remove that uncertainty. So that's bullish for the pound. The second is that the numbers she's putting out there, and again, we have to look at them and see how they're, as Philip Hammond said, how they're going to be raised. These are some big numbers, right? I mean, that 130 billion pounds is almost more than any other line item except for the NHS, right? So I think there is some certainty. The numbers are kind of big, and so I think that is bullish for the pound in the near term. Look, it's down, but the dollar is much stronger, right? And so if you look at the euro or the pound against the euro, I mean, it's underperformed certainly this month, but I mean, I don't say it's material.
Okay, so given the big ticket bills or the money swirling around like the 130 and then 40 to businesses, are UK rate hikes that are being priced in looking excessive now?
Well, I think this is the issue we're going to have to sort out, is that type of stimulus is obviously going to be very positive for the economy and potentially very inflationary in the sense that it boosts economic activity in the face of consumers spending not money on energy bills but on consumption. And so if anything, that would push the bank to be more reactive, as Philip Hammond said, to kind of offset that.
Yeah.
And so I think we first of all have to see how much is actually going to be delivered, how it's going to be paid for.
How fast, I guess?
Exactly, and how fast, obviously. And so all of this stuff will matter. I mean, the bank is obviously expected to be very aggressive in the near term because of the, of the high inflationary pressure we see here in the UK.
But I mean, just generally, are you more optimistic or more pessimistic about the UK than you were last week?
Well,
given some of the numbers.
Yeah, no, I mean, I think on balance to have more clarity, to have a plan in place is positive. I think to be kind of more positive on gilts or less positive on gilts, be more positive on equities, we're going to need to see the details a little bit more closely. So I'm going to, if possible, just reserve judgment a little bit going forward.
Okay, I'm going back to my yoga, like right now.
Yeah.
What do we do with the balance of payment?
Well, I mean, I think this is an important, aspect overall for the UK. But I mean, I think in general, given the overall, direction of the UK economy, concerns about the cost of living increase, I think investors are going to be more concerned about kind of the fiscal spending and the plan rather than the balance of payments.
I mean, given the characters that will be put in the cabinet, can we have an idea of what kind of economy Liz Truss wants?
Well, I mean, I think, it's difficult because she obviously wants to address the energy. The two, the cost of living adjustment and the energy crisis are kind of the two things that she really needs to address. And she's been very clear in her campaign that she wants to do that. The one thing I would say is that her margin of victory, if kind of a commentary on that would be that it was slightly less than we were expecting, to be fair.
Yeah.
And therefore, maybe that waters down her mandate a little bit.
But do you think there's a longing to be Singapore-on-Thames, given the tax cuts? Or is this just playing to her Tory party?
No, I mean, I think that there is. I mean, I think she'll deliver on some of the tax breaks that she put forward. I think she would have to.
Yeah.
But I also think that again, she's going to have to now, in the cold light of day, right, deal with the economic reality.
All right, Scott, thank you so much. Scott Thiel, their chief fixed income strategist at BlackRock, stays with us, and we'll talk a little bit also about treasuries. Coming up, drastic times call for drastic measures. European governments race to avoid an energy catastrophe. So we'll also have more of that next. And this is Bloomberg.
Is it possible the industry is in an arms race that will lead to spending itself into an oversupply? I mean, that has happened before.
We've looked at this very carefully, and the digitization of everything. Tell me what aspect of your life, Emily, isn't becoming more digital?
Well, I'm trying to prevent that, but yes, I think it's happening.
And COVID has accelerated that. The industry crossed $500 billion last year, the semiconductor industry overall, and estimates are $1 trillion, a doubling by the end of the decade at that point. I believe those estimates. It's not that there's not going to be some blips and turns on the way, and the majority of that is driven by leadership process technology, of which only 3 companies can satisfy that need.
No one covers the world like Bloomberg.
We have to get interest rates higher and bring inflation back to our target.
33 million people have been affected by this flooding in the monsoon.
Disruption is the whole point of a strike.
With unmatched reach and resources from more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. So European governments are racing to stave off an energy catastrophe this winter. Germany plans to keep 2 of its 3 nuclear plants on standby in case of a power shortfall. Now, energy ministers will call for coordinated power demand reductions and emergency liquidity tools when they meet on Friday. And the French President Emmanuel Macron is also backing an EU-wide windfall tax on profits of energy companies.
Si la Commission venait à décider de mettre un plafond au prix du gaz,
we support a European mechanism which we ask from the European energy operators whose production costs are far lower than market sale prices. This is the approach that France supports and the approach that France and Germany support. It's the most coherent to fight against the disruption at the EU level.
Well, we're back with Scott Thiel. He's Chief Fixed Income Strategist at BlackRock. Scott, if we focus, first of all, thank you for sticking around, but if we focus now on Europe, so the ECB markets believe that they can hike by 75 basis points. How difficult is this when actually inflation's really running out of control because of the energy crisis?
Yeah, I mean, they're going to face a very stark trade-off, as time emerges here, right? We expect them to go 75 basis points this week.
Thursday,
just fully priced in. I don't think that's going to be a surprise. But looking forward, the energy crisis and the supply shock that is driving inflation in Europe is something that's difficult for the ECB to control with the policy, right? And so, in other words, as they raise rates, they're going to push the country into a deeper, the zone, into a deeper recession. We have economic forecasts, for contraction next year in Europe. And that's going to be part of the, pushing rates higher into a supply shock inflationary environment.
But how difficult is it to see the second and third round effects? So are we actually talking about, potentially 15, 20% of companies having to go bust?
Yeah, I mean, we wouldn't say that's where we are at this point. I mean, what we would note is that, core inflation, for example, in Europe is running as high as it is in the U.S., which is pretty remarkable. But as we look at the kind of the contraction that we think is going to come in the economy as a result of the current ECB pathway, we see a contraction that brings inflation in a few years back down to target. But it's clear that in the near term, there's going to be continued upward pressure in the Eurozone. We see that peaking, sometime in the first quarter of 2023.
We have big election, and actually we'll have team live coverage from Rome in Italy on September 25th.
Yeah.
I mean, this is significant because of the reforms that they could abandon if we have a right-wing coalition that Draghi had put in place, but also they seem much more friendly towards Putin.
Yeah, I mean, the way we kind of classify this election in some respects is that there's less uncertainty about the kind of political aspect and more uncertainty about the economy, right? In 2018, we had the flip, right? We had kind of, more uncertainty about the economy, more uncertainty about the politics, less uncertainty about the economy. So I think it's going to be very interesting to see how Italy faces, the current account has moved negative, and there are other kind of economic issues. I think the political issue is kind of, center-right government delivered Brothers of Italy.
Are you buying BTPs?
Well, okay, so BTP is an interesting trade, right? Because they are about 240, again, rounding. We think that's a 200, 300 range, and that's a yield spread to German government bonds. And so it doesn't surprise me going to an election where not much is expected, they're right in the middle. So what we would do is wait for them to get to the cheaper end before buying and the tighter end before selling. So the market seems to believe that this is really, in some respect, not a non-event, but it's not that big of an event. because the spread is exactly in the middle of its recent range.
Scott, what do you do with treasuries right now?
Well, so we remain short of treasuries, noting the flatness of the yield curve and the lack of term premium in the long end of the market. Our view is that the Fed will continue to tighten, push rates higher, but then more likely pause rather than the easing cycle that's currently priced in. So we're going to remain short of treasuries as the Fed continues to address the politics of inflation, and that trade-off, which they have yet to acknowledge between growth and inflation, comes into focus in the coming quarters.
All right, Scott, thank you so much. Always fun. Scott Thiel. And also we talk about yoga, because every time you come on, the markets are in a panic, and it's like, just have a moment. Is that what you do when the markets are wild?
I just take a pause, a moment of reflection, as I say.
And see longer term. Scott Thiel, Chief Fixed Income Strategist at BlackRock. Coming up, we have plenty more, of course, on some of the big corporate stories. Volkswagen driving ahead with its plan to list a minority stake in Porsche. That's despite market turmoil. That's coming up next, and this is Bloomberg.
When I started, I had no idea it was going to turn into this, which is a tracksuit empire. I don't have any investors. All this is all money in. This is me going out and hustling, bringing that money back, and just building it, building it, building it. You gotta think about a person that was homeless at one point, didn't really have any money coming in. The fact that this person was relentless and just determined to succeed and not let rock bottom define him as an individual. I can take things and put them together and take them apart and make them better and put them back together. I respect the craft, so I don't want to minimize and disrespect the value of each step of the craft and do by machine what should be done by hand.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now let's get straight to the Bloomberg. First word news, here's Laura Wright. Hi, Laura.
Hi, Francine. Liz Truss, who is set to take over from Boris Johnson as UK Prime Minister later today, is said to have drafted plans to freeze household electricity and gas bills. The policy, which could cost as much as £130 billion over the next 18 months, would see the government finance the difference with what energy companies would have charged under the previous system. Truss beat former Chancellor Rishi Sunak in a contest for a new Conservative Party leader, taking 57% of the votes cast. OPEC Plus has agreed to reduce oil production by 100,000 barrels a day in October in a surprise move that reverses this month's hike. The cut is aimed at stabilizing global markets and takes the cartel's oil output back to August levels. Group leader Saudi Arabia says it shows OPEC is willing to be attentive and proactive. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg Francine.
Laura, thanks so much. Now, Volkswagen has decided to push ahead with its plans to list a minority stake in sports car maker Porsche this year amid gyrations in the markets. Now, despite volatility, the German automaker is paving the way for what could be one of Europe's biggest IPOs. Well, joining us now for more is our global car czar. He is Craig Trudell. That title never gets old. Craig, so what's exactly behind Volkswagen push to IPO Porsche?
I think it's still somewhat of an unanswered question, just why they have decided to go ahead with this, given the conditions that we've seen. I mean, the IPO market is basically closed, but they make the case that this is not a situation where they really absolutely need the money in Volkswagen. But I think the closest thing we've arrived at in terms of an answer here is that they view this as an asset that sort of, is able to withstand any sort of negative conditions. And so, the idea of going ahead with this now, sort of counting on the idea that once markets do lift, the valuation will account for that. And, sort of move along with this, given all of the effort and time and expense that's been put into this effort already.
So what can you tell? I mean, this is, a very good story. There was feuds. There was I guess breaking up, making up. I mean, there's everything in this. What's the relationship going to be like between Volkswagen and Porsche?
It's going to be interesting. I think there's absolutely going to still be a lot of cooperation here and a lot of dependence on one another, but it will be a situation where Volkswagen is able to cash in on this valuable asset. Porsche is able to, perhaps gain a little bit of independence. There is still a question about, governance concerns. You have Oliver Blume, the new CEO of Volkswagen, just since last week, remaining CEO of Porsche as well. So, at least for the time being, you're going to have the same man leading both companies. And so that does suggest that there's going to be quite close cooperation here, but we'll see if that, lasts. That is something that's coming up as sort of a source of criticism is the fact that you have the same guy running both companies.
So investors, I guess, are worried about that and just the general market turmoil picture.
Yeah, absolutely. But I think what we're also seeing here is this is just a tiny sliver of the company, right? So if you're just listing, 10%, you're almost controlling supply, much like you control the supply of Ferraris or Porsches, right? And so that may also sort of help explain why this is having no trouble going ahead, despite the fact that the markets are in the state that they're in.
Craig, thank you so much. As always, Craig Trudell there, our global cards are on this Porsche IPO. Now, coming up, drastic times calls for drastic measures. EU governments race to avoid an energy catastrophe with multiple plans. We'll have a look at that. We'll also look at markets. We have a great live blog. I urge everyone to go and check it out, TLIV, on the Bloomberg terminal. They're talking about gilt markets, saying that they can actually handle an increased UK government borrowing. This is according to our Marcus Ashworth from Bloomberg Opinion. Will they? We'll also discuss that a little bit later. This is Bloomberg.
COVID has changed everything. People are changing the way they work
and the way they travel. Can you explain what you mean?
I think the world is never going back to the way it was fully before the pandemic. And one of the changes, I think, David, has been a change in how we work. Many people had a job at an office. They're not going to be required to come back to the office 5 days a week. And I don't think CEOs per se are going to determine these policies. I think workers will, because all of us CEOs, I think, want the best talent. And I think flexibility is going to be the second most important benefit after compensation. All of this, David, has culminated in Airbnb not just being a company about traveling, but now a company about living. So there's this whole new category of travel that's not classic 2-3 nights in a city. It's not long-term housing, and it's completely emerged because of the pandemic.
About the future of the entertainment business. Where do you think it's going? You think there's going to be movie theaters forever?
Anybody that says to you, and I won't name names, that says the movie business is over, are fools.
When you've had your fill of IPOs, ETFs, and CPI,
tune into the lineup for some NFL, NBA, and MLB. Did you retire too early? I mean, look at some of these payouts.
I absolutely retired too early.
For the inside scoop on sports betting, catch the lineup right here on Bloomberg.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Relief plan. Incoming Prime Minister Liz Truss is said to earmark £130 billion to contain gas and electricity prices for UK households. Crude dynamics. OPEC Plus announces a modest cut in production, but a Monday rally fizzles as China lockdowns renew concerns about demand. Plus, private warnings. Russia risks deep and prolonged economic damages as the impact of sanctions spreads. That's according to an internal government report. We speak with Ukraine's Prime Minister. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, this is what markets are looking at right now. The focus is not only on inflation, but some of the support that we could be getting from Europe. The euro is still tumbling, but actually stocks are seeing a bit of a lift. Overall, you can see also sterling 115.64. U.S. futures are also rising. Retailers and autos amongst the best performing sectors in the stocks Europe 600. Energy and healthcare actually trading, and the pound rebounding as traders assess the agenda of the incoming UK Prime Minister Liz Truss, who again plans to alleviate energy bills in a policy that may cost $130 billion over 18 months. Now, Ukraine's Prime Minister says his country has an absolute commitment from European politicians to support Ukraine in the war against Russia, despite turmoil they face in the energy markets. Well, he spoke to Maria today. Take a listen.
You know, we have a war, criminal war in Ukraine, bloody war, but European Union also have a war, hybrid war, because it's gas and oil blackmail, it's hybrid cyber and disinformational attacks, it's food crises which Russia creates, blocking our seaports, it's migrant crises which Russia creates by killing civilians in Ukraine and having a famine in African and Asian countries. All of this is elements of hybrid war. So this, what has happened in European Union, on European continent, is not so simple. It's not because of the war in Ukraine. It's because of action of Russia in European Union, in Ukraine, all around the world. So now we have a war, principal war between different worlds, between civilized world, between democracy and freedom, and between autocracy, between Soviet-style principles, between Russian Empire. So we wouldn't like to be part of Russian Empire, as you mentioned, but we would like to be part of free and democratic Europe, democratic world. And very important to understand, all of us, that only to be united we could win in this war, and we could save our democratic and freedom principles, and we should go through this winter. We should find possibility to go through this war and to win in this war. Every of us on its own place. We in Ukraine protect borders of Europe from military invasion, but Europe should protect the democratic principles in Ukraine, should support us, and should protect the democratic and freedom principles on the territory of European Union. So because of this, we should acting together like one unit.
And did you have a clear commitment, though, from European officials that these sanctions are going to stay on? It doesn't matter whether there's Nord Stream 1 flows, where they come back or they don't. The European Union is not going to play along the rules that Vladimir Putin wants, which are very clear: lift the sanctions.
We can see absolute understanding from European leaders that we are in a hybrid war. We have absolute understanding that Russia is blackmailing European politicians, and we have absolutely assurance from European politics that they will stay with Ukraine till the win.
Ukraine's Prime Minister there, Denis Shmyhal. Now joining us is Olena Borodina, transition risk analyst at London-based global affairs think tank ODI, formerly the Overseas Development Institute. Olena, thank you for joining us. How do you see this economic war continuing and being resolved at the end?
Good morning, Francine, and thank you for having me. Indeed, I suppose it's useful to look at Nord Stream 1 closure first and foremost in a wider context. The war in Ukraine is not going to Russia's plan. We know that Ukraine has been announcing gains in the south of the country, and the referendum on joining Russia in Kherson has been paused, which are all signals that not only the invasion but also the occupation of Ukrainian territories is not going to plan. And for now, Ukraine still has the support of its European partners. Russia wants to intensify Europe's energy crisis ahead of a very difficult winter. There is no doubt about that. And we need to remember that Putin has harbored resentment of the West as a collective for a very long time. And by supporting Ukraine economically, militarily, and through humanitarian assistance, Europe has made itself a target for Putin's economic warfare.
But so Olena, do you see any waning of the support? I know that they're very, very subtle, but actually certain countries, I would say Italy, the popular support is waning. Where do we end up in 12 months from now?
I think that's a very good question, and I think much will depend on the measures that European countries put in place to support consumers through the energy crisis. I don't think the collective support for Ukraine is going to wane, because we understand now what's on the table, just what's at stake if support for Ukraine is lost. But much is going to depend on the measures that European countries put in place to support consumers and businesses through the very difficult 12 months ahead.
So, Olena, how do you see that going? I guess, is there a political resolve? Do you hear political resolve from Brussels in spending whatever it takes to try not for Putin to have the upper hand on this?
I think that the signals we're seeing coming from Europe in the last couple of days indicate that we are going to see continued support for Ukraine. European countries like Germany are going to support its consumers, and that should help maintain the political support for the government to support Ukraine.
Olena, where do you see the gas? I mean, can Russia, if they stop all of this gas going into Europe, but also some of the oil, which actually Brussels said they also don't want, I think, starting December 5th, could they sell it to others? It's unclear, right, depending on who you speak to, how much these sanctions are actually doing to the Russian economy.
Well, that's a very interesting question, and I think that it's very difficult to actually understand what impact that the oil prices might be having on Russian economy, because I don't think we're seeing the true figures, and I think that the report that has been leaked indicates that the measures might be having a wider impact. I think it's likely that Russian oil will be sold to other sources. Just where it's going to go is quite difficult to tell, and I'm not best placed to answer that question. But I think that we are going to see countries like China, for example, trying to take advantage of oil caps in Europe.
Olena, one of the also open-ended questions, it's unclear what this does to the energy transition towards more sustainable or renewables. Does it accelerate it, or does it take a back step?
Well, I think that's a very good question. In the short term, I think we're going to see increased use of fossil fuels to help plug some of the energy gaps. I think in the longer term, we are still on path towards energy transition. But I think the question we should be asking ourselves now, and the question Europe should be asking itself now, is what kind of energy transition we're going to see, and whether it will increase our strategic dependencies on other countries. If we're looking for energy security, energy transition is not necessarily a silver bullet if we're going to create strategic dependency on countries like China, which now supply quite a lot of our renewables.
Olena, thank you so much for joining us today. Elena Borodina, their transition risk analyst at London-based global affairs think tank, ODI, formerly the Overseas Development Institute. Now, coming up, incoming Prime Minister Liz Truss inherits a raft of challenges. We discuss the outlook for the UK economy next, and this is Bloomberg.
China's appetite for energy is enormous. The country consumes about a quarter of the world's energy supply, 35% more than the US annually. Its energy needs have more than tripled since the year 2000. That consumption has helped to fuel astonishing growth, but it's come at a cost.
China is the world's largest greenhouse gas emitter. There is no way to tackle climate change unless China reduces its emissions to net zero.
The country's reliance on fossil fuels is also a hindrance to its own growth and the well-being of its citizens.
China is not energy secure. It has a massive import bill for things like oil and gas. It has a long-standing pollution problem, and it is also prone to outages that severely hamper industry.
All this has led the world's biggest polluter to take steps towards a radical transformation.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition, and I'm Francine Lacqua here in London. Now, we know it's a big day for UK politics. Boris Johnson leaving Downing Street to make way for Liz Truss to take over following her victory over her rival, former Chancellor Rishi Sunak. Now, in his final speech as Prime Minister, Johnson vowed to enthusiastically back Truss during her time as Prime Minister.
Let me say that I am now like one of those booster rockets that has fulfilled its function, and I will now be gently re-entering the atmosphere and splashing down invisibly in some remote and obscure corner of the Pacific. And like Cincinnatus, I am returning to my plough, and I will be offering this government nothing but the most fervent support.
Joining us now is Camilla Cavendish, member of the House of Lords, former head of the Downing Street Policy Unit under Prime Minister David Cameron, and also FT columnist. Camilla, we're also, I think, good morning. First of all, I got distracted because I'm hearing that I think we're seeing Boris Johnson's plane land in Aberdeen. So they're both, Liz Truss and Boris Johnson, actually going on two separate planes to meet the Queen for security reasons. So let's talk about some of the policies. Camilla, thank you so much once again for joining us. Okay, £130 billion, then $40 billion for businesses is what we're hearing for this big energy plan.
Yes.
I mean, how are we going to fund this?
Well,
it's not just that. She's also she wants to reverse the national insurance rise that was planned. She's planning to spend 3% on defence. So the numbers do get bigger and bigger. She's clearly going to borrow. I mean, she's got a kind of Reaganite prospectus in a way, which is deficit-funded tax cuts. She doesn't seem to believe those are inflationary. If you look back to a book she co-authored, actually, called Britannia Unchained, which was written back in the early days of David Cameron with Kwasi Kwarteng, who is probably going to be her chancellor, they were very much small state Tories arguing for tax cuts. And in fact, she has said she doesn't really mind cutting tax for the rich. Might not be advisable at the moment, but we shall see.
Do you think she has to do a U-turn? I mean, maybe not straight away, but if the numbers don't add up, and I understand this was her campaign promise, really, it's cutting taxes.
Well, this is the great question. She has actually quoted her own father, who was a Liberal Democrat who's on the left, and he's apparently embarrassed by her conversion to conservatism, and he's said that he hopes she's a sleeper within the Conservative movement. A lot of people are hoping she is a sleeper. She's done what you've suggested, which is in order to win the campaign among a very narrow group of members, she's promised things that are quite extreme. Everything she has said in the past week and her supporters are saying today suggests she will not be changing course.
The problem is that we have a little balance of payment problem,
yes,
right?
You have been discussing this earlier on the programme, and we have the pound falling, we have a balance of payments problem. We have to hope. I mean, we are very dependent in this country on the kindness of strangers who are holding our debt. We have to hope that foreign investors will continue to invest. The other problem she's going to have is the trade unions. There's going to be a series of strikes this winter, and that could compound the problems.
Camilla, you understand the Conservative Party probably more than you know most people, certainly most people outside the UK. What can you tell us about how different this government will be? I mean, they're kind of cut from the same cloth. She
is a welcome change to Boris Johnson's government in the sense that his government lacked integrity. He is left today because of a series of largely self-inflicted mistakes. You know, he was unclear, he told a number of untruths, he actually even rewrote the ministerial code. So the first thing she has to do is restore integrity and confidence in government. And I do think that's really important for business as well as the public. And I think she will do that. I mean, she does actually, she will read her red boxes. She will get up in the morning and attend the meetings. And she's a very hard worker. So she will do that. And in that sense, there will be a change of tone, I think. But broadly, it will be similar. She is a conservative with small state beliefs coming to power at a time when she's going to have to spend a lot of money, which is really very similar to Boris Johnson. She's also a liberal conservative, socially liberal, just as Boris Johnson was. But I do think she probably, hopefully, will be better at executing some of the projects.
Do you think Boris Johnson's shadow will always remain there? Will he influence policies? Could we see a Trump-style Boris Johnson, or will he go on the reading circuit?
You showed a clip of him earlier this morning in Number 10. He gave his speech, and he gave some marvelous. He quoted somebody who was a sort of hero of ancient
Roman
times, a Roman general who had come to power for 15 days and then went back to manage his farm, famously. But the rest of the story, which most people didn't know until this morning, is that this guy actually didn't just stick with his plough, he came back 10 years later. So Boris Johnson, ever the entertainer and the dramatist, is leaving that hanging over. I actually think he will go back to being a very successful journalist. He will make a lot of money on the speaker's circuit, and I suspect he doesn't really have the appetite to come back. But he will be remaining in Parliament, and he will be wanting to speak out on certain issues. And he has a magnetism that means it will be impossible for the media to ignore what he says.
So does it depend on whether Liz Truss wins or fails this? Whether the heartstrings of the Conservative Party will still be longing for Boris Johnson at the end of it?
She has a big challenge in October, which is when the Conservative Party has its annual conference. They will anoint her as leader. The danger for her is that Boris Johnson will do what he used to do when I worked for David Cameron. He gives his own speech in the side hall, and far more people watch that one. If she plays it right, he will back her, and he won't do that this year. But what he does this year in October will tell us a lot.
Who should she surround herself with? So we have already an idea of cabinet, but this makes all the difference at Number 10.
She's going to clear out most of the people in number 10. We've actually had, I think, 7 different regimes in number 10, even since I left under David Cameron. It's very Italian, but it's also, if you remember, because Boris Johnson ended up having 3 different regimes because they kept saying, you just need better people around you. Actually, the problem was him. So we're not clear yet who she will bring into number 10. There are many, many good civil servants and officials, remember, who will be there. She just needs a group of people around her who she trusts and who can execute real policy.
I can't really figure out, if you look at the polls between the Conservatives and Labour, there's about a 10-point difference. And I can't figure out whether it's because Keir Starmer is not doing well enough or whether actually a 10-point lead is not bad.
I think people are very unclear at the moment about what Keir Starmer stands for. He's been, I think, understandably quite careful about policy, but I have no idea what he would do if he was Prime Minister tomorrow. Equally, although she has made a lot of statements, I'm not sure we will be clear until at least the end of this week what she's going to do. So I really don't think the polls at this point matter very much. I think Keir Starmer is going to have to put some meat on the bones in the next few months.
I mean, I feel like 15 years ago there was a clear, we knew what Labour stood for, we knew what the Conservatives stood for, and now apart from maybe the tax cuts, the policies are kind of meshing into one because of this crisis.
That would be no bad thing. I would much prefer, Francine, that we had a government of national unity right now. I mean, that would be a big-hearted, intelligent response to a crisis. That's not going to happen because the Conservative Party has a majority of 71. It doesn't need to reach out. But I do actually think a crisis of this magnitude across the world does require very, very grown-up government, and it requires people to ditch ideology.
Camilla, do you think that actually Liz Truss will look at the market? So we had Philip Hammond, and he was saying, the markets need to hold the feet to the fire of the government.
Yes.
Because we talked about the balance of payments, do you think she's looking, not on a daily basis on the Bloomberg terminal, although we would welcome that, but, is she going to be looking at her market reaction to what she says?
I very much hope so. And I think that will be, she has to restore confidence in this country. She has to win the confidence of the business community. Boris Johnson, again, was frustrated with big business. Yeah. There was a feeling in the Conservative Party that big business had backed Remain in the referendum, and they didn't want to deal with them. This new regime has to get over that. We are 6 years away from that vote now, and we have to restore relations with business and listen to business. She, of course, wants to cut corporation tax, not raise corporation tax.
Yeah.
I mean, she should be, I think, quite business-friendly. But whoever is her chancellor, as you say, is going to have to watch the numbers very, very closely.
Yeah, and the corporation tax, you also wonder whether now's the time to cut, taxes on banks, given the profits. Yeah. Overall, are you pretty optimistic? There's the strikes that she needs to deal with, the Labour, NHS. Are you optimistic that she's going to do this right?
I don't think anybody can be optimistic because the challenges are so momentous, and we've had 7 weeks of hiatus because of this contest. But she does come, Liz Truss comes to power at a time with lower expectations than I think any previous Prime Minister. So she can probably only do better than the expectations, and that's an opportunity for her.
All right, Camilla, thanks so much, as always. Camilla Cavendish there, member of the House of Lords, former head of the Downing Street policy under Prime Minister David Cameron, an FT columnist. She'll also join us, actually, on our weekly podcast in the city. Now, coming up, our continued coverage of the UK's incoming Prime Minister, Liz Truss. Crucially, we're beginning to learn more about her plans to confront the country's imminent energy crisis. So we'll break down the numbers next. This is Bloomberg.
possible the industry's in an arms race that will lead to spending itself into an oversupply. I mean, that has happened before.
We've looked at this very carefully, and the digitization of everything. Tell me what aspect of your life, Emily, isn't becoming more digital?
Well, I'm trying to prevent that, but yes, I think it's happening.
And COVID has accelerated that. The industry crossed $500 billion last year, the semiconductor industry overall, and estimates are $1 trillion, a doubling by the end of the decade at that point. I believe those estimates. It's not that there's not going to be some blips and turns on the way, and the majority of that is driven by leadership process technology, of which only 3 companies can satisfy that need.
The difference between endless research and a winning strategy. To improve your firm's productivity and profitability, Bloomberg Law combines the latest in AI-powered tools and in-depth analysis to accelerate the research process. To grow your practice and make better use of your valuable time. The difference is Bloomberg Law.
However you get your news. This is Bloomberg Daybreak with Lee. On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now let's get straight to your Bloomberg Business Flash. Here's Laura Wright. Hi, Laura.
Hi, Francine. Germany is reversing its policy to shut down its nuclear plants as officials admit it's unlikely to meet its target for natural gas storage ahead of the cold weather. The 2 nuclear plants will be made available for this winter only as it works to ensure its energy security. Germany has also signed an energy pact with France, with Paris supplying gas as needed and Berlin exporting electricity when demand peaks. Volkswagen is pushing ahead with its plan to list a minority stake in Porsche this year, paving the way for what could be one of Europe's biggest IPOs. It's planning a listing as early as the end of this month. With the share sale, the billionaire family behind the Porsche brand will regain direct influence some 13 years after they sold out to VW. CVS Health has reached a deal to buy home health and technology services provider Signify Health for about $8 billion. It continues the U.S. drugstore chain's expansion beyond its retail origins. Signify's potential suitors had reportedly included United Health Group and Amazon.com. That's the Bloomberg Business Flash. Francine.
Thank you so much, Laura. Now let's check on the markets, and we're also getting a couple of headlines from ECB officials. First of all, Mr. Kazak saying the ECB will hike above neutral rate if needed, and then we also have the Maltese central bank governor saying that they're determining when to use TPI. This is a new ECB tool, and this is one of the major challenges. European stocks for the moment edging higher. Investors assessing responses by leaders to the region's growing energy crisis, and this is ahead of that ECB policy meeting on Thursday. Bloomberg Surveillance Early Edition continues in the next hour. Matt Miller and Kay Lines will be in New York. Our Anna Edwards is here in London, and this is Bloomberg.
Apple has identified its next big business, bringing advertisements to more parts of your iPhone.
Today, Apple pushes ads in 3 places: the App Store, Apple News, and the Stocks app. In the News and Stocks apps, Apple shows display advertisements. That means that third-party companies like car dealerships or mortgage lenders can showcase their advertisements just like they can on a website. On the App Store, the situation is different. There, Apple has search ads. This allows developers to buy their way into showing up higher on search results. For instance, an App Store developer can bid for the term car racing or basketball so their apps would surface above competing apps in the list of results. Apple's push into ads is a little ironic, given that its ATT, or App Tracking Transparency Privacy feature, limits the ability for Meta, Snap, and even smaller developers to generate as much revenue as possible from advertising. That's because the feature allows users to choose if they want their data collected and tracked across third-party apps and websites. Still, Apple's hoping to expand its own ads business and is planning to add search ads to its Maps app. Other areas where ads could eventually appear are in Apple Books and Apple Podcasts, along, maybe one day, with an ad-supported tier of Apple TV Plus to compete with new offerings from Netflix and other streaming video providers. I'm Mark Gurman. This is Power On.
This is a very challenging environment.
We do expect that the economy to slow.
But I think the global factors are a little secondary for the Fed right now.
My guess is that things are much less good than the Fed has supposed.
This is a little bit of a period where we can have some hope of growing through this shock.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kaylee Lines.
It's 10 a.m. in London, 5 a.m. in New York, and 5 p.m. in Hong Kong. Our top stories today. Liz Truss is poised to become the UK's next Prime Minister after winning the Conservative Party's leadership contest. She's drafting a plan to freeze energy bills for British households and help UK business. Germany will keep 2 nuclear plants alive as the EU struggles with the energy crisis. Meanwhile, oil's rally stalls following that surprise production cutback by OPEC and its allies. And the US government is considering whether to appeal a judge's ruling that creates a special master for those documents seized from Donald Trump's home. The judge also temporarily blocked the US from using the papers in its criminal investigation. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kaylee Lines in New York. Well, Kaylee, I can report that whilst you were away yesterday, we were really risk-off here in Europe. Things looking a little bit brighter today, though.
Yeah, it definitely was a pretty bad Monday while all of the U.S. was out on holiday, Anna. But coming into the day in the Asian session, it also wasn't the most risk-on ever. You actually had a mixed day overall. The MSCI Asia Pacific Index was down by about 1/4 to 0.3%. You did have some outperformance coming from China, though. The CSI 300 up the better part of 1%. Of course, in China, the focus really remains on supportive policies for the economy and any potential further easing measures. But a lot of other central banks are tightening, and that continued in Australia overnight, where the RBA hiked rates by 50 basis points for the 4th meeting in a row. And they said that more hikes are indeed on the way as they continue to try to rein in inflation. Interestingly, though, not a lot of reaction in the Australian bond market, essentially unchanged on the 2-year yield overnight, which sits still at 3.02%. And in foreign exchange, which is where a lot of the action has been centered, my attention is on the Japanese yen, weaker against the dollar by 0.8%. We're out at 141.71. 121 on dollar yen. That is the weakest yen going all the way back to August of 1998. So we're talking 24 years, Matt. Of course, it is a rate differential story as we're seeing Treasury yields moving higher this morning.
Yeah, the dollar showing a little strength this morning. Interestingly, not against the pound or the euro. Take a look at what we're seeing in terms of futures gains after the horrible week that equities had last week, but only about 0.5%. So we'll see if this holds. Still 4.5 hours to go until the market open. The 10-year yield right now rising up as investors are letting go of that debt to 325.38. And you see crude actually coming up as well. This is really interesting because we have NYMEX crude rising, so Texas Intermediate up, but Brent is coming down. So that spread between those two is narrowing after the news we got that OPEC is going to cut production by 100,000 barrels a day. And then finally, Bitcoin trading at bang on $20,000. Kaylee and I, of course, have our crypto show today, so we're going to go through everything related to cryptocurrencies and the price of Bitcoin really front and center. Anna?
Yeah, and we have a crypto guest coming up this hour, so we'll continue to follow that story. Matt, this is the picture for European assets right now, for European stocks. Let's start there. A rebound for European stocks. It looked very red on this map yesterday, I can tell you, for those in the US who were not at work at their desks looking at equity markets. It was really red. We had news on Friday, of course, about Gazprom not reopening that pipeline, Nord Stream 1. And as a result, gas prices stormed higher, up by 20, 30% at one point of the trading day. And that put pressure on risk assets, including stocks. Today looks different. Today, retail stocks getting a boost from the UK stimulus plan, and we see energy stocks and some utilities under pressure. This is the picture we've got for UK assets then, focusing in on that stimulus plan. 130 billion pounds worth of support for households, another 40 billion coming for UK businesses, and the pound, a little bit of a line in the sand, perhaps being drawn for how long, we wonder, but 115 now, the handle, up by 0.4% for the pound against the US dollar. The gilt story is really interesting. We've seen gilt yields rising around uncertainty and concern around higher inflation and whether the government would come forward with plans. We had a big sort of limbo in UK politics over the summer while this leadership contest was taking place, and that left a lot of space for worry, and gilt yields were on the rise. Today we see a steepening of the curve, as it seems that the short end, we're seeing yields coming down a little bit, and that's because of comfort that perhaps something has been done to support the economy, and maybe inflation actually kept in check by what's being done on energy prices. But longer end, we do have those gilt yields rising as a result of concern about debt levels. We'll continue to monitor that situation. This is the natural gas price. I mentioned it was up 20, 30% at different stages of the trading day yesterday. Today it moves down by 10.4%. It's really volatile. We didn't get to 340 or so euros per megawatt hour, though. That was the high we saw earlier on in this summer. The euro then also getting a little bit of a boost, a little bit reflecting that risk-on mentality that we have this morning, Kaylee, in distinct contrast to yesterday's session.
Yeah, it's a very different Tuesday than it was a Monday. So let's talk about, Anna, what is ahead on this Tuesday. It's a little bit light on the data docket here in the U.S. ISM services data will be released at 10 a.m. Wall Street time. Plus, in politics, U.S. primary elections are scheduled today in Massachusetts. And in UK politics, Liz Truss will officially take over as the new Prime Minister.
Hello, traders. Good morning. How are you today? I'm going to place an order to buy Bitcoin. If you want to trade Bitcoin today, please place your order at the price 19,927. Order placed 19,927. Okay, stay with me. We're a little bit away from the actual price. If it will move down, we will fill the order, and then I'll let you know what's going to happen next. Okay, guys? Stay cool. I'll speak to you later.
Lizzie Burden joins us now from Downing Street. So, Lizzie, will there be a Truss honeymoon? I mean, I know she campaigned on small government, fewer handouts, tax cuts, but all of a sudden we're hearing about 130 billion pounds for the people, 40 billion pounds for businesses, and more big handouts to come.
Yeah, Matt, if that's not a U-turn, I don't know what is.
as soon as Liz Truss touches down from Scotland after she's seen the Queen, the hard work is going to begin. It's a forbidding in trade. She's got double-digit inflation, the Bank of England hiking. Yesterday we heard from Catherine Mann, a BOE policymaker. She didn't rule out 75 basis points, which would mean even more pain for consumers. If Truss doesn't get the policy mix right, we've also heard from Deutsche Bank that there would be a sterling crisis, and Truss cannot ignore the markets. She has said that the city is part of the blob she wants to take on, but don't forget, the last two prolonged periods of Conservative rule were ended by balance of payments and sterling crises, so she can't ignore them. But she also needs to hold the party together. Johnson, in his leaving speech, said that it was time for politics to end, time for delivery. But remember, Truss yesterday won less than half of the eligible electorate's votes, and even then that's a tiny fraction of the overall UK population that's voting. Not to mention the fact that the parliamentary party preferred, well, the MPs in the party preferred Rishi Sunak for leader, so then there's the question of will they appoint his allies and him, not him, he's ruled it out, but his allies into the cabinet. Boris Johnson learned what happens if you displease the parliamentary party.
Yeah, so we learned a bit about what Boris Johnson plans or doesn't plan for his future. More to come, no doubt, from him at some point. What about Truss's plans around energy? Matt alluded to them. Will there be enough?
Well, this is a big Bloomberg scoop. We're reporting that Truss plans to freeze gas and electricity bills for consumers to the tune of £130 billion, with another £40 billion plan for businesses. The pound has risen on the plans, but the question is, will the Tory base that's just selected Truss be happy with that? As I say, it seems like a handout. She's expressed throughout the campaign that she prefers tax cuts to handouts. Also, it's likely to be ill-targeted, so it would be fiscally wasteful. But economists are saying, like Paul Johnson at the Institute for Fiscal Studies, that for all its flaws, a big intervention like this is unavoidable at this stage. But we did just have Philip Hammond, the former Chancellor, on the programme. He said that the government doesn't have a bottomless pot of money. It can't solve every crisis. So you have to ask what Truss is going to do if this is the new normal.
All right, Bloomberg's Lizzie Burden reporting from Downing Street. Thank you so much. Meanwhile, Ukraine's prime minister says his nation's allies should do their utmost to help end Russia's invasion fast because time is favoring Moscow. Speaking to Bloomberg in Brussels, he also said Ukraine can fulfill its gas transit obligations to European customers despite the war.
We can see absolute understanding from European leaders that we are in a hybrid war. We have absolute understanding that Russia is blackmailing European politicians, and we have absolutely assurance from European politics that they will stay with Ukraine till the win.
Anthony DePaola, Bloomberg Middle East energy correspondent, is joining us now from Dubai for the latest on Europe's energy crisis. What is the latest, Anthony?
Hi, Kaylee. Good morning. Yeah, it's a critical situation in Europe now on the gas page, particularly because we're not getting that gas from Russia anymore into the European Union. On Friday, as you had mentioned, there was the announcement that that gas has been cut off, and that's key for European countries to fill up their storage, their gas storage, for the winter months. So, you know, they're pulling out all the other stops to try to find different solutions. Really, it's a supply issue. It's the supply of the energy coming in, and they need to find other energy sources. So we've got Russia and Germany talking together about how they can swap power back and forth between some of the nuclear plants, between some of Germany's plants. Germany is struggling to fill up their gas to get to those kind of levels that they want going into the autumn, so that they're in better shape for the winter months. They're also looking at fiscal issues like a windfall profits tax on energy companies to help finance some of the additional expense, and taking some of that burden off of the customers, similar to what you've mentioned that Liz Truss is talking about in the UK. So taking some of that burden off the customers, and making it a little bit more affordable. But really, it's a supply issue, and that's going to continue affecting the balances this winter and going forward, Kaylee.
So we'll watch to see what policies are announced by European leaders on Friday then, Anthony. We've seen, sticking with the commodities theme, we've seen some interesting moves by OPEC Plus, what was described by many as a symbolic cut in production from OPEC Plus, and yet it had an impact on prices. Tell us what's happening.
Yeah, Anna, that cut really unrolls an addition that they put in September, which at the time when they said they were going to increase by 100,000 barrels a day, that was described as minuscule, as kind of a sop to Joe Biden, who had gone to Saudi Arabia in July asking for more oil to blunt those energy prices. We have seen prices come off in recent months, and that was apparently a little bit too low, too much of a drop for the Saudis, and they wanted to show that OPEC is at the wheel, looking at the market, and is going to react quickly if they see the market softening too much. We've got really that price increase yesterday because it was a surprise. OPEC wasn't expected to take oil off the market. They were expected to just stand pat. But today we see some of that increase rolling back because those concerns about demand are coming to the fore again, mainly based on China. They've still got lockdowns there, so that's going to be an issue for OPEC that OPEC is really going to be watching out for, Anna.
And we will all be watching out for it. Bloomberg's Anthony DiPaolo reporting from Dubai. Thank you so much. Now to politics. The U.S. Justice Department is considering whether to appeal a judge's decision regarding documents seized from Donald Trump's home in Florida. The judge has granted the former president's request to have a special master, a neutral third party, review the papers. Joe Matthew, Bloomberg Washington correspondent, joins us now from D.C. for more. So, Joe, where does this leave the DOJ?
Well, it's interesting as they kind of figure out their next steps. I will say that there was a question about whether this special master would even be appointed because of the inherent redundancy here. To your point, Kaylee, this is a neutral third party. He's going to be looking for attorney-client privilege or executive privilege violations here in these documents. But remember, the DOJ already has a so-called filter team for the very same purpose. That team is made up of members specifically not part of the prosecution team handling the case. But we're going to do this largely because of the sensitivity of the case, and the judge who was appointed by Donald Trump says her decision was partly justified by the Justice Department's admission that some investigators actually saw some of these documents that may have been covered by attorney-client privilege. This could come down to an argument about executive privilege, however. That is one that has yet to really be understood here, because what the Trump team is asserting is that executive privilege is blanket across the board. The DOJ, however, says that a former president cannot assert executive privilege against the administration of a sitting president. So there's a bit of complexity to this, and it's one, Kelly, that could be decided in the end by the Supreme Court.
Joe, thanks very much for joining us. Bloomberg's Joe Matthew. There is no better time to listen to Joe's show. You can do that every weekday. His radio program, Sound On, starts at 5 p.m. Eastern Time on Bloomberg Radio. Now, back to industry. Volkswagen is pushing ahead with its plan to list a minority stake in Porsche this year, paving the way for what could be one of Europe's biggest IPOs. Joining us now for more is our global car czar, Craig Trudell. And Craig, it just seems like VW and Porsche have the worst timing, right? But I guess they're going to push through with this anyway in a pretty horrible market.
Yeah, it is really the case that the IPO market over here is essentially closed, and yet we're seeing this push ahead. I think it may be a case where Porsche does not necessarily need to be in a rush. Volkswagen doesn't need the money right now, but they're sort of betting that this is an asset that's going to be appreciated even in a market like this. That the performance of this company and of this brand through the pandemic, through the chip crisis, through now the energy crisis, has been extremely strong, and the amount of demand for an asset like this, especially when it's just roughly 10% of the float, is going to be strong, despite the fact that we're going through such a difficult market. and that's why we're seeing them push ahead with this, despite the conditions that we're in.
All right, Bloomberg's Craig Trudell, thank you so much. Let's turn now to some company stories here in the U.S. and take a look at some stocks on the move in pre-market trading. It was a merger Monday in that we had a deal announced yesterday, and you're seeing the share reaction to it on this Tuesday morning. Signify Health, the telehealth provider, will be bought by CVS for about $8 billion or $30.50 a share. That stock is trading at $29.12 this morning, only up about 1.2%. But remember, we have seen a serious run-up in anticipation of the deal, and CVS, meanwhile, is higher by just more than 1/2%. It is a steep drop, though, this morning for Bed Bath & Beyond. We got some sad news over the weekend that the company's CFO had fallen to his death from a skyscraper here in Manhattan. It's unclear how exactly that may or may not be related to the move we were seeing in the shares this morning, but the stock is down more than 16%, could be the 5th down day in a row after it already had fallen 35% in the last 4 days. And we're also seeing a decline for another stock, Digital World Acquisition Corp. This is the SPAC that is supposed to merge with President Trump, former President Trump's social media company, but apparently they did not get requisite shareholder approval to extend the deadline to complete that deal, and as a result, that stock is down 17% before the bell, Anna.
Kaylee, thanks very much for the update there on the pre-market movers. Coming up on the program, Guy Miller, Chief Market Strategist at Zurich Insurance. He'll be with us to take us through his thoughts on the markets. We're seeing a lot of support being offered by governments here in Europe now amidst this energy crisis. Will it be enough? What expectations do we have for European and global growth? And we will talk crypto. Glenn Goodman joins us, crypto consultant at eToro. What is it about that 20,000 level? Why do we get stuck there? We will talk to him about that and much beyond. What will the new UK administration do on the crypto front? That is one of the questions, and we'll talk Ethereum as well. This is Bloomberg.
What do you think of when you think of a battery? For most, it's what we use to power devices for both work and play, and maybe even your car. Over the past few decades, they've gotten way more powerful, long-lasting, and affordable. But all of this is just a prologue to what the next batteries are going to do.
As we drive to an increasingly renewable power-driven grid, we also need to be able to store energy and release it later to cover those periods of weather intermittencies that are driving this new grid that we're in. It's a multi-trillion-dollar opportunity, and it's imperative that we figure out the solution here.
How we store energy on a massive scale is in many ways the central challenge of the fight to stop climate change.
Of the entertainment business. Where do you think it's going? Do you think there's going to be movie theaters forever?
Anybody that says to you, and I won't name names, that says the movie business is over, are fools.
Welcome back to Bloomberg Surveillance. We are simulcast on both Bloomberg Radio and Bloomberg Television, and the whole band is back together. Kaylee Lyons with me here in New York, Anna Edwards out of London. I'm looking at the odds of a 75 basis point hike, and it doesn't really matter which of the major central banks you pick. We're looking for that from the ECB. We're looking for that from the Fed, and actually from the BOE, I think. In fact, Dan Curtis put this chart together, and when he did, there was a line for the Bank of England, but maybe Liz Truss has gotten rid of that line before we put this chart on air. In any case, we were looking for a 75 basis point raised by them as well, possibly. Lynn Thomason joins us now, Bloomberg Markets editor. Lynn, how much does energy play into this? How much do central banks want to get ahead of inflation? Are they going too far?
Yeah, absolutely. I mean, I think that is the central question for markets and central bankers right now is how do you get the energy situation under control? And I think, you know, just the unprecedented nature of 75 basis points for the ECB at a time when, you know, you think about last year, the year before, you know, the ECB was the center of negative rates, and now we're seeing giant 75 basis point moves being priced in. It just really speaks to how much things have changed.
And drawing a line onto the pound, perhaps. Pound weakness was a feature of recent weeks, but today things look a little different?
Yeah, absolutely. I mean, I think you're seeing some stabilization around that $1.15 level, but also it's come down so far. I mean, it just seems like just a month ago we were at $1.20 on the pound, and, you know, it would be understandable that things are starting to stabilize.
Okay, now down at 115. Thanks to Lynn Thomason joining us there with a look at the markets. For more market analysis, check out MLIV Go. That's the market blog on your Bloomberg terminal. This is Bloomberg.
Okay, traders, you got it. We purchased Bitcoin, as you can see. So well done. Stay with me. Compared to Forex pairs, we make money and make profit based on percentage. It's all about your money management. It's all about how much you decided to invest when you purchased or sold short. Well, when you purchase contract, it might be short contract, short selling, or long buying contract. So how much you decided to invest? In our case, 1% gives us £1,000. Okay, so how it works? As soon as it will reach, let's say 1%, we will place stop loss. So in this case, we will not lose any money at all on our purchase. Right now, the price moved a little bit down, so you still have time. All of you guys, you still have time to enter position. Stay with me, and I'll speak to you later.
The ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
From the world of politics to the world of business. Balance of Power with David Weston. News, analysis, insight from and about politics power players. Weekdays, this is Bloomberg. Markets are preparing to close, but the day is not over yet.
Stock that is now up about 45%.
A lot of volatility right now.
You need the power of the Bloomberg terminal to get you market-moving data before anyone else.
These numbers are much higher than expected.
Upgraded today to overweight.
You need top analysts to bring you exclusive global insight into cross-asset markets.
The muni bond market.
China is a really big focus.
Bitcoin ain't playing along today.
It's going to be short-term.
Bloomberg Markets, The Close. Weekdays on Bloomberg.
Now, keeping you up to date with news from around the world, here's the first word. In China, lockdowns are spreading as coronavirus cases rise. Parts of a southern city of 6 million, Guiyang, have been sealed off. Meanwhile, Chengdu has extended a stay-at-home order for 21 million residents through Wednesday. California has narrowly avoided having to impose rotating power blackouts due to a heat wave. Still, officials warn that the state's power grid faces an even bigger test today. Demand could reach a record as businesses and schools reopen after the long Labor Day weekend. And Russia may face a longer and deeper recession as the impact of sanctions spreads. Bloomberg has viewed an internal report prepared for the Russian government. 2 of the 3 scenarios in the report show a contraction accelerating next year, with the economy returning to the pre-war level only at the end of the decade or later. Coming up, we'll get back to the markets with Guy Miller, Chief Market Strategist at Zurich Insurance. This is Bloomberg.
Today, what are the biggest challenges for General Dynamics and what are the biggest opportunities?
So I think in any business, the challenges are solving complex problems that come to you. You know, the problems that come to me and my senior leadership team for resolving tend to be highly complex and nettlesome. So your ability to solve those complex problems are an important element, I think, of the value that we add to the company. And then I think opportunities, you always want to make sure that you've got a creative enough mind, an open enough mind to be able to see around square corners. What am I missing? You know, the why questions are really powerful. Why are we not doing this, or why are we doing this? I ask those questions a lot, and in the answers, you can sometimes tease out some real opportunities, some hidden things. But thinking creatively about opportunities and problems is really important.
And what about the industry generally? Do you think they have big challenges now as the defense budget probably comes down a bit?
So I think that we are all responsible, and we have an obligation to find the latest and best technologies that we can for our customers and deliver them in the most cost-effective manner we can. And I think that that's a challenge and an opportunity for all of the big defense companies.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. Liz Truss is poised to become the UK's next Prime Minister after winning the Conservative Party's leadership contest. She's drafting a plan to freeze energy bills for British households and help UK business. Germany will keep 2 nuclear plants alive as the EU struggles with its energy crisis. Meanwhile, oil's rally stalls following that surprise production cutback by OPEC and its allies. And the US government is considering whether to appeal a judge's ruling that creates a special master, an independent voice for those documents seized from Donald Trump's home. The judge also temporarily blocked the US from using the papers in its criminal investigation. I'm Anna Edwards, live in London with Matt Miller and Kaylee Lyons over in New York. And Matt, things were pretty gloomy for risk assets yesterday. Things looking better today, and US futures pointing a little higher after the sell-off of Friday. Seems a long time ago.
Yeah, the sell-off of Friday and really the last 3 weeks it does make sense that we're seeing a little bit of a bounce right now in futures. Up only about 0.6%. We still have 4 hours to go until the open, but we've seen so much red, and we have to catch up a little bit after that holiday. Actually, Europe had a really red day yesterday, so it makes sense that you see a little bit of a bounce there as well. The U.S. 10-year rising to 3.25 right now, so investors letting go of that debt. What I find really interesting is the dollar index gaining here, although not against the euro and the pound, and we have Texas Intermediate up. So crude rising here, falling there in terms of Brent, the global benchmark, after OPEC Plus said it'll cut 100,000 barrels. We have Bitcoin right now just about 20,000, a little bit under, 19,894. It is rising from a fairly low level in terms of the trading band, but we're going to dive deeper into that later on in this program. And then, of course, later today, Kaylee and I have our crypto show at 1 p.m. So do tune in for that. Kaylee, what do you see in terms of pre-market movers this morning?
Well, I am looking forward to watching crypto with you all day today, Matt, but I'm actually have my eyes elsewhere in terms of the movers in pre-market trading, including the meme stocks. Bed Bath & Beyond could be down today for a 5th day in a row, already down 35% over the last 4 sessions, and this morning on this Tuesday, down about 16.5% before the bell. It is unclear if that move is related to the death of the company's CFO, who fell from a skyscraper here in Manhattan over the weekend. Very sad news, but is that what is having a drag on the stock this morning, or is it just that we're seeing a broader sell-off in the meme stock space, because you also see the likes of GameStop down about 5%. In other movers, though, to the upside, Signify Health is being bought by CVS, a deal that had been speculated about but is now actually announced. It is an $8 billion deal, $35.50 a share. The stock is trading at $29.27 this morning, up about 1.7%. And another stock moving higher by nearly 7% is CoStar. This is on news over the weekend that it gets to join the S&P 500. That will be effective as of September 19th, but in anticipation of that, we're seeing shares gaining this morning, Anna.
So some decent pre-market moves then, Kaylee. Here's what we're seeing on European equity markets. A bit of a bounce from yesterday's losses, but the DAX was down by more than 2% in yesterday's session, not gaining by that much today. So overall, across the European space, we're up by 0.4% today. Drawing a line in the sand, it seems, at least in the short term, around the pound. There's been a lot of pound weakness over the summer with that political vacuum. Now we've had more policy suggestions, even if not formal announcements, from the incoming Prime Minister, Liz Truss. And so the pound is up by 0.6%. Natural gas prices up by 20-30% at different stages of the trading day yesterday. This is the European benchmark for natural gas, now falling, down by 10.7%. So that is adding a little bit of relief, a little bit of appetite for risk assets. But bear in mind, we've just put out an interesting story across the Bloomberg, the views of Equinor operating in the energy space and the utility space here in Europe. They think we could see as much as $1.5 trillion worth of margin calls for trading European energy, and they're concerned that all this money is being tied up with margin calls, capital being tied up in that fashion as these energy players try to trade at higher and higher prices, which had been the trade of late, of course. This is the euro then, up by 0.2%. It is also getting a boost because we look more risk on today because of this gas price dropping here in Europe. So we are seeing a little bit of appetite for the euro as we work towards that ECB meeting on Thursday, Kaylee.
All right, Anna, well, let's turn to a bearish take, because one of Wall Street's biggest bears is turning even more pessimistic on the outlook for U.S. earnings. Morgan Stanley's Mike Wilson says, quote, "We think the next several quarters will end up containing some of the most significant downward revisions to forward EPS forecasts we have seen in the past several cycles. Lows for this bear market will likely arrive in the fourth quarter." Let's get the take now from Guy Miller, Chief Market Strategist at Zurich Insurance, who is joining us now. Guy, what is your take on Mike Wilson's view of the world?
Good morning. Not terribly different, maybe not quite as bearish. I think what's been remarkable over the last year is how well margins have held up, not just in the United States, but also in Europe. In the case of the US, corporate America has again done a very good job at controlling costs, but also taking advantage of some pricing power to push prices up and maintain margins pretty much close to record levels. I think as we get into the end part of the year, that's going to be much more challenging. We hear from small businesses, they're finding it harder to push prices higher. And as we know, the cost element is not really abating yet. So from a margin perspective, I think there's further downside pressure ahead, meaning earnings revisions have to come quite a lot lower as well.
So what does that mean for whether or not we've seen the worst of it yet in terms of lows for this bear market?
Yeah, I don't think we have. I mean, I think we will retest the lows that we had in the middle of June. And I think the reason for that is, although this is the most, I think, anticipated recession in the US and Europe than we've ever had, I don't think it's fully reflected in the markets themselves. Margins, as I said, will come down, earnings will come down, and although positioning is light and sentiment is poor, I suspect that we'll get a further downdraft for equity markets in the months ahead. It's unusual for equity markets to bottom before we're actually in an officially defined US recession. Right now, we're not there yet. Suggests to me that we've got some further downside ahead.
How much, Guy, have you pushed out into commodities over the past couple of years? And does your portfolio now look substantially different than it did sort of pre-COVID?
I think we've done anything directly in commodities themselves. The asset classes that we look at, we've certainly done more in privates, we've done more in real estate. These asset classes have benefited from some illiquidity premium. We're also benefiting on the real estate side from some of the pricing environment as well. But the bulk of our views around government bonds and equities hasn't really changed all that much since the pre-pandemic period.
It hasn't changed much since the pre-pandemic period. So what's the difference right now? What are you doing differently now than you were, say, a year ago when we were hitting highs?
Well, I think the difference right now is that we no longer have the abundant liquidity provided by central banks that really gives investors a support mechanism, whether it be in bonds or equities or credit. These days have gone. We know that the central banks are fixated on bringing back their inflation back to their targets. As a result of that, the old concept about having central bank puts, we think, is now gone. So right now, we think this is a much more idiosyncratic market environment, one where we still think the pressures are on the downside because we've yet to really see tangible signs that inflation has peaked, and importantly, tangible evidence that central banks are backing off from their hiking paths. Right now, we're almost in this arms race by the central banks where they're trying to outdo each other in terms of hiking rates higher and higher. Ultimately, we think this could lead to policy errors, given the volatility of markets, given the unpredictability of the data that we're seeing, and of course, the exogenous factors around energy prices, particularly gas prices in Europe.
And we'll see where that takes us on Thursday with the ECB, Guy. Here in the UK, we've heard a lot. We suspect now that Liz Truss, the incoming Prime Minister in the UK, is going to announce a big package, £130 billion worth of support for households, capping energy prices, essentially, and also some support for business. What do you think about gilts with that in mind? Clearly, some in the market want to see support for the underlying UK economy, but others will be concerned about debt loads. I saw Deutsche Bank talking about the possibility of a balance of payments crisis, given that 25 to 30% of gilts are owned by those not in the UK.
Yeah, look, I think the situation in the UK is clearly challenged. We've got debt to GDP roughly 95%, not as high as some countries. There's a bit of room there given what we've seen in terms of the fiscal packages over the last year. And clearly the critical factor is we need to provide support to households in the short term. I would rather see it much more targeted towards those who really need it, rather than putting blanket caps on, because I think the cost of that can be high, it can be misdirected, and more importantly, it dulls the effect of market pricing in terms of refocusing the demand-supply dynamic. So clearly something has to be done, and it needs to be done now, but I would prefer to see more targeted policy response coming in. To your point about gilts, clearly, we still think there's upward pressure in there, because the fact we're even having this conversation is suggesting that investors are repricing the sustainability of the UK debt. We don't think it's a problem, but clearly in the near term could put further upside in terms of the gilt market yields.
Okay, so we'll watch that. On the pound, 115.99. A lot of people asking questions about, as you say, the size and the untargeted nature of the fiscal package being announced here in the UK and what that's going to do to the Bank of England and its need to respond. How are you thinking about the Bank of England's response?
Well, the Bank of England have tried to make it as clear as they can, and there's been a few hiccups in the messaging. But the response still has to be one of focus on the inflation target and making sure that they keep their independence and focus on monetary policy, which suggests to us that we're going to see, of course, further rate hikes going forward. They need to be credible. They need to follow through in terms of the messaging that they're given. But given what we've said about the fiscal and the monetary side, certainly sterling is under pressure, and we think that pressure is likely to continue for some time, despite these moves higher by the Bank of England.
Guy, thanks so much. Thanks for joining us. Guy Miller of Zurich Insurance, thanks for being with us on the program. Coming up, we will talk crypto. Glenn Goodman joins us, crypto consultant at eToro. We will have a discussion about where we are in the crypto universe. That comes next. This is Bloomberg.
When I started, I had no idea it was going to turn into this, which is a tracksuit empire. I don't have any investors. All this is all money in. This is me going out and hustling, bringing that money back, and just building it, building it, building it. You gotta think about a person that was homeless at one point, didn't really have any money coming in. The fact that this person was relentless and just determined to succeed and not let rock bottom define him as an individual. I can take things and put them together and take them apart and make them better and put them back together. I respect the craft, so I don't want to minimize and disrespect the value of each step of the craft and do by machine what should be done by hand.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller with Kaylee Lyons in New York and Anna Edwards in London. Now, crypto uncertainty continues as Bitcoin just hovers below $20,000. Joining us to discuss the entire universe, but focusing in on Bitcoin, of course, at first, is Glenn Goodman, crypto consultant at eToro, one of the, I guess, biggest analysts in the space. Glenn, what do you make of this kind of stagnance that we've seen in, or stagnation, I guess is the right word, that we've seen in Bitcoin and crypto at large? Why do you think we're not seeing any movement out of this range?
It's because of the institutions that came into the space. You know, everybody wanted the institutions to come into the space. They were desperate for it for years. But once they actually came in during 2021, they changed the whole nature of crypto and turned it into a kind of a risk-on asset as a whole. So, you know, Bitcoin and all the other cryptos basically have moved in line with the US markets, particularly NASDAQ in recent times, over the last 6 months. But it's actually even worse than that, because if you compare them, what you find is that as NASDAQ has gone down over the last 6 months, every time it takes a lurch down, Bitcoin and Ethereum, for example, lurch down even further. But then when NASDAQ has its periodic recoveries, they don't recover as strongly. There isn't much buying power underneath them. They're just seen as such risk-on assets now, and this is not a risk-on environment. So the buying power simply isn't there, and they've just been falling and falling. even Ethereum, which is thought of as sort of the next big thing because of the merge that's coming up.
Exactly. So that's the point I just wanted to get to. Everybody in crypto is kind of excited for this merge to happen, waiting for it and thinking of it maybe as some kind of catalyst for a move higher. Do you see it the same way?
I mean, it's not even just that. They're talking as if Ethereum's already been going crazy. And, you know, when you look at where it bottomed, yeah, okay, it has come up a lot since June. But the fact is, it fell a lot harder than Bitcoin in the first place. Over the past 6 months, between, say, December and June, it was falling a lot harder than Bitcoin. So all it's done in the last couple of months, actually, is just regain, sort of fill that gap with Bitcoin. And now they're both down around about 60% since December last year. So I'm not too excited by that idea that the merge has been causing loads of people to buy, but nonetheless, in technological terms, I think the merge could be a big step forward in the longer term, particularly for environmental reasons, because it reduces the impact by 99.5%. So, you know, Ethereum currently using about as much energy for mining as the Netherlands, and now it will be going down to using virtually no energy. And of course, at this time when we're all worrying about gas prices, it couldn't have come at a better time. Fantastic PR for Ethereum.
Well, Glenn, there's obviously been a lot of chatter about the merge. There's also been a lot of chatter around the viral Corn Kid TikTok, and if you haven't seen it, you should go watch it. But you say that actually the Corn Kid is representative of a kind of persistence in inflation in things like food and energy prices that could actually ultimately drive more people toward Bitcoin. Can you walk me through that thinking?
Yeah, basically, the Corn Kid, who first went viral on TikTok and then everywhere else. Maybe I'm thinking about this a bit too deeply, I don't know. Maybe I'm getting a bit too philosophical here, but I kind of feel like everybody's obsession with this kid's love of corn, his just pure innocent love of the item, the food item that is corn, right? Everybody's bought into that. They're all like, yeah, it's so true. We never appreciate corn. It's come at the perfect time if you think about it, because suddenly, for the first time, probably since the Second World War, people are starting to not take things like basic foodstuffs for granted anymore. We can't be sure that they'll be there in significant quantities or in sufficient quantities over the next few years, depending on what happens in the Ukraine war and to energy prices and thus to food prices. Because the important thing to note here is that gas, the price of gas, influences very heavily the price of fertilizer because it's an ingredient in fertilizer. And therefore, if you haven't got enough fertilizer or fertilizer is too expensive, as we're seeing, you get prices of basic foodstuffs rising. So I think that people being, you know, loving corn and stuff is kind of, as I say, maybe I'm thinking too deeply, but
we like the philosophy.
Yeah, exactly. I think it
and this comes back
that.
to crypto, Glenn, in that once you have inflation eating into savings, maybe you want to go toward gold and Bitcoin.
Exactly, and so far that hasn't happened. Of course, gold and Bitcoin haven't been doing so well, but, you know, if inflation persists in the longer term, and particularly in Europe, where currencies are tanking, you might see an effect like you saw in Turkey and Nigeria, where the twin troubles of inflation and currencies tanking equal interest in Bitcoin and buying Bitcoin.
Okay, we'll see how that plays out. Glenn, let me take you to the UK, though, and the narrative around regulation of crypto here. A new Prime Minister, incoming Prime Minister, of course, Liz Truss, and we're all trying to work out what she means for all kinds of assets. But thinking about crypto, she tweeted back in 2018 that she would welcome cryptocurrencies in a way that doesn't constrain their potential, liberate free enterprise areas by removing regulations that restrict prosperity. And we all know that she's a small government kind of person, kind of leader. That's what she said. So what are your expectations with that in mind?
I'm optimistic. Yeah, she hasn't really mentioned crypto very much at all since 2018, unfortunately. But, you know, it wasn't her brief, so why should she mention it? And in the meantime, the UK Treasury has been making all kinds of moves to welcome crypto, just as she would like, really, as sort of creating or trying to create a new regulatory environment that would be good for stable coins, that would be good for crypto in general. Now, of course, that's all been put on the back burner because the guy who was in charge of that is... But at the same time, Liz Truss, as you say, say she has pro-business instinct. And let's not forget, back in 2018, when she made that remark, that was brave, because at the time, senior politicians and senior bankers were generally saying that crypto was a load of rubbish, that it was a criminal's paradise, a nest of vipers. Everybody should stay way away from it. So she was quite brave in being pro-crypto at that time. That makes me think that we've got a prime minister who's going to continue to be pro-crypto.
Okay, we'll see. Glenn, thank you very much for joining us. Glenn Goodman of eToro, consultancy eToro, joining us here on set to talk about crypto. And with that in mind, Kaylee, time to plug your show.
Yes, because, Anna, it is Tuesday, so make sure you don't miss Bloomberg Crypto today at 1 p.m. New York time. That's 6 p.m. in London. It's our weekly show hosted by Matt and me. Covers the people, transactions, and technology shaping the world of decentralized finance. So tune in. This is Bloomberg.
If you do any kind of business in this country, there's a pretty good chance that you're going to see that business registered in Delaware. Why? Because that's where you do it. And our point was Wyoming can be that venue for blockchain enterprise, for crypto.
It's not the Wyoming way to sit around and wait for change. We want that independence, we want that freedom, we want that individuality. And that's a common theme that brings together bipartisan support for this in Wyoming.
We want to make sure that people understand, especially in Wyoming, but as the United States as a whole, this trend is coming. It's not going to stop. This is more of a small town that's growing into what I would call the cryptocurrency version of Silicon Valley.
It's the philosophy of that rugged individualism, the independence, and the ability to really get things done for yourself and control your own destiny. You get that from a blockchain, and you don't get that without it.
The difference between endless research and a winning strategy. To improve your firm's productivity and profitability, Bloomberg Law combines the latest in AI-powered tools and in-depth analysis to accelerate the research process. To grow your practice and make better use of your valuable time. The difference is Bloomberg Law.
But I do think it's a salutary reminder to the new Prime Minister on her first day in office that the markets are watching, and probably more so than at any time since the referendum in 2016. The markets are looking very, very closely at political pronouncements, and the UK does face some serious headwinds.
Few words of warning there from the former UK Chancellor Philip Hammond, who was speaking to the team here at Bloomberg a little bit earlier on. I'm Anna Edwards in London with Kaylee Lyons and Matt Miller in New York. Also in New York, Tom Keene joins us, co-anchor of Bloomberg Surveillance. He can tell us what's coming up in the next few hours of programming. Good to see you once again, Tom. And I know all things UK very much on your mind this morning as well.
Yeah, very much so. And I had to pick because there's so much to pick from this morning. The markets are absolutely extraordinary as America returns from a summer holidays, led by Kaylee Lines, I should point out. She was off for a month, I think, the Lines sabbatical. But what we got is futures up 25, Dow futures up 179, and none of it matters. What matters, Anna, is foreign exchange, and we see it today in the historic events in Britain with two traipsing north to the Queen, and it is trade-rated sterling, not back to the 80s when there was a sharp dip down, but back to the 90s and John Major, and up we go with the British boom, and then down we go from 2007 and Brexit, and now down touching new weakness, not quite back to where we were in the 90s. Carl Weinberg with a brilliant piece this morning with High Frequency Economics saying it is about the new prime minister and the Slutsky effect. All that means is how do you adapt to declining real incomes? That's the heart of the matter, according to Dr. Weinberg.
I'm looking forward, Tom, to Bruce Kasman today because JP Morgan has a 4,800 target, not Bruce, obviously, it's Dubravko Lakos Buyas. A 4,800 target on the S&P with earnings at 225. It'll be interesting to see if Bruce thinks we're headed for a recession and we need to revise those earnings lower.
Well, it's like the Vatican. There's all sorts of sections of it. And away from Bruce Kasman is Jim Glassman, who has that same optimism, Matt. Dr. Glassman was on in front of the jobs report, and he was heated in rebutting the gloom on the American labor economy. Maybe that's how you get to 4,800 as a Glassman labor economy.
All right, Tom Keene, co-anchor of Bloomberg Surveillance, thank you so much. And as we continue to watch the American labor economy, we also are watching the economy in the UK, Anna, because we know the new Prime Minister, Liz Truss, has some plans for it.
Yeah, absolutely. We're watching the amount of money that's going to be given out to support households and to support businesses. But in the meantime, there's some choreography to be dealt with. The outgoing Prime Minister is heading to Balmoral in Scotland to meet the Queen to hand in his resignation. And Liz Truss, who you see on screen, will become the new UK Prime Minister. That happens in an hour or two. This is Bloomberg.
So as you look back on your career, what would you say is the best investment advice you've ever received?
Probably the best investment advice that I never received, but that I've lived my whole life around, is surround yourself with really good people. I thought about it just today, like I do many times, what makes a great investor? A great investment firm is comprised of people who are optimists and pessimists and realists. Because in the intersection of the debates that go across that wide range of personalities is where you find truth. It's part of the reason I'm so focused on freedom of expression. I see it in my own four walls, the robust and fulsome debates around how we commit our capital, what defines a good idea, what businesses to build or pursue. That's what drives the success at Citadel. And I've been very fortunate in life to have always had a group of friends who really push me, who make me better. And here I get to work with 3,500 colleagues who in their ways make me better each and every day. And collectively, as a team, we've had the opportunity to have an incredible impact on the financial landscape around the world.
Unfortunately, good news in the labor market can be bad news because the Fed will have to respond more.
This isn't really going to significantly change the trajectory of the Fed.
We've heard from the Fed that we are likely to be higher and tighter for longer.
That was the core messaging from Jackson Hole. There will not be rate cuts in 2023.
I think the Fed's telling us there's going to be pain.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Gramo's back. That's the headline. That's the good news. Live from New York City. That's where the good news ends.
And now,
for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance on TV and radio. Alongside Tom Keene, I'm Jonathan Farrow, together with the wonderful Lisa Abramowitz. Back in the seat. Futures up 0.6% on the S&P 500. TK, after the long weekend, we hit the ground running.
We hit the ground running. In fact, I was watching the markets over the weekend, John. It's absolutely extraordinary. We could spend the entire show just on foreign exchange. Things are moving. The news flow is extraordinary.
Got to talk about the earnings too. Mike Wilson of Morgan Stanley cutting his earnings forecast, Tom. Bottom line, here's the quote. We think the next several quarters will end up containing some of the most significant downward revisions to forward EPS forecasts we have seen in the past several cycles.
Yeah, I like what he says. He says we cut EPS further. That's all there is to it, and he bets down on that. I think we're going to see a lot of that, John, frankly, going both ways. I would expect some of the bulls to go the other way. Ben Laidler to join in moments, pushes against Mike Wilson's tone.
Hard to be bullish right now. More lockdowns in China. Energy issues over in Europe. I think we can call it an energy crisis, Lisa. We've been doing that for a while.
Absolutely.
And now we're starting to see the relief, the plans, and they get bigger and bigger and bigger from European governments.
So the question that a lot of people are raising is, have we seen the bottom? Because right now we're seeing every worst case scenario play out, whether it's the lockdowns in China that are escalating ahead of the confab later this year for the party, the Congress. How much do we see the energy shutdowns in Europe continuing and getting worse? Have we seen the bottom of this all getting priced in, or have we not recognized that this is a worst case scenario of a confluence of a pretty severe number of things?
Worst case is the base case. How much worse can it get? Have you seen some of the forecasts on the foreign exchange side of things? Yes. We've got a euro-dollar call from Jordan Rochester over in Nomura, looking at 90 cents on euro-dollar. This from Citi. This is before we had the plans from Liz Truss, and let's see if we even get those plans in reality. But cable over at Citi could fall to 105 to 110.
Yeah.
These are some monster calls in foreign exchange.
We're talking about more people calling for parity for the pound, not just the euro, for the pound, because of some of these proposals and this concern that Deutsche Bank's George Saravelos raised over the weekend of a flight of foreign investors not willing to fund a deficit at a time when Liz Truss talked about tax cuts while also increasing expenditures. How does this really play out when you need to really develop some of the foreign investor base?
Matt Miller put it well earlier this morning, Tom, when he talked about 75 basis point hikes. It's not just the Fed. We're looking ahead to the ECB, perhaps getting that on Thursday, looking ahead to the Bank of England, perhaps getting that from them too. After I heard from Catherine Mann, a speech from her just yesterday, Tom. Tell you what, that teed up a big move from the BOE.
The man was real simple. The acclaimed economist of Massachusetts Institute of Technology, of course, her work at Citigroup. And John, she said the rope is fraying on the anchored expectations tone. John, the best research note this morning, no surprise, comes from Mr. Nabarro over at Citigroup. You remember him, 18% inflation, I believe, was the splash he made 6 weeks ago. The fiscal proposals of Prime Minister Truss are they are the same amount of cash call as the last 8 years combined.
Lisa called it. You wonder whether we start to see some tension in the bond market off the back of some of these plans. I'd argue we've already seen signs of it over the last month. If you're just tuning in this morning, good morning. Let's hit the ground running this Tuesday morning. Futures bouncing back 0.6% on the S&P, on the Nasdaq 100 up 0.7%. Yields higher on a 10-year by, let's call it 6 basis points, 324.81 on a 10-year. Crude just a little bit softer, down 0.2% here. Bramo 86.72.
Yeah, the focus very much in Europe, full front and center. That is where the crisis is. That is where the change in leadership is over in the United Kingdom. Liz Truss is expected to deliver a speech possibly around 11:30 a.m. Eastern time from 10 Downing Street. Perhaps she will outline her plan for a 130 billion pound issue. How do you support some of the household budgets and freeze energy bills where they are rather than allowing them to climb? What you are seeing in the pound is a little bit of a reprieve of a direct downward trend trend? How much do you get a real feeling of concern about this spending plan, especially without any plans to raise money at a time of such a dire projection for the UK economy? Today in the United States, the Senate returns after the Labor Day holiday. They're going to be talking about a lot of issues, confirmations of judges trying to get back rolling after a month recess. How much is gas still full front and center? It continues, gasoline, petrol, in your words, John. It continues to decline for yet another set of days. It has been something near 80 days straight of declines in the price of oil. How much does this really give some support to the Democrats heading into the midterm elections? We have just 9 weeks until those elections. And at 10 a.m., we get a bit of U.S. data, August ISM Services Index data getting released. How much do we see it continuing to come in? Some expectations are for it to come to the lowest levels going back to the peak of the pandemic. And John, this is the issue that we are not talking about. OPEC Plus actually reduced its, increased some of its production over the weekend, actually decreased, some of its production because it's worried about the lack of demand globally, out of China, out of the U.S. How much is that continue to be a theme heading into the winter?
Just a coincidence that after the G7 agrees an oil price cap on Russia, that all of a sudden we get cuts from OPEC Plus, and then you get the Nord Stream 1 pipeline getting shut down for good, potentially?
Well, but you're still getting oil prices go down. And if that, to me, says a lot, John. This is a concern about demand destruction, about demand falling off in the weakness of growth, not necessarily sort of supplies coming offline. And that, to me, is fascinating.
Lisa, thank you. We'll pick up on that story a little bit later this hour. Joining us now is Ben Laidler, Global Market Strategist at eToro. Ben, it's your job to tell us how on earth you can be bullish in a moment like this. How can you be?
I think you've just answered the question yourself, haven't you? When everyone's on this sort of race to the bottom of, who can get more bearish, who can have the more outlandish sort of forecasts, I think that just tells you where market psychology is right now. Sentiment, different ways to measure it. It's at global financial crisis lows. And however bad you think this is, that's not it. The inflation fever, I think, is beginning to break. You've got corporates, consumers that, for now, are remaining remarkably resilient. It won't last forever. But it's the fact of the matter today. The U.S. economy is actually re-accelerating right now, right? It's not about to sort of plunge into recession. We're having healthy jobs reports. We've got gasoline prices coming down. The consumer's going to end up with more money in their pocket. I mean, I could go on and on. I do think this is a market which is talking itself into a funk, and a little bit of less bad news, which is all you need. I think goes a very long way from here.
Ben, the research dump this morning is off the chart. I want to congratulate you on your ETF and passive investment research piece. It's just really extraordinary. But I got to stay on markets this morning. Buried in your note is a single line that the bond market is speaking. The bond market is saying companies are fine. Discuss that.
Yeah, that's exactly it. I mean, we look at earnings. Earnings expectations you talked about earlier. Yeah, they're falling, but they're still 7-8%. They're still very healthy. Corporate profit margins are, yes, they're falling, but they're falling from sort of record levels. Default rates are absolutely, record lows. Companies, used the last crisis very well to sort of refinance. And that's the message you're getting sort of loud and clear from the corporate bond market. Yes, spreads have widened. Yes, the weakest companies are finding it difficult to refinance, but spreads are very tight versus sort of historical levels. And I think, we talk a lot. I mean, I'm the equity guy, but you're getting these messages if you choose to look for them, and I'm not sure everybody is, that are telling you that corporates have been very nimble and very resilient, have default rates are low, and they're ready to weather this slowdown that's coming.
A lot of people, Ben, say that the corporate bond market isn't the same weather vane that it used to be, simply because of how much companies termed out some of their maturities. Looking at the bottom line, have we priced in the ramifications for U.S. companies from a deep European recession, which is becoming the base case for an increasing number of Wall Street firms?
So what happens if you don't get a deep European recession? So, I mean, there are no good policy choices in Europe right now, but basically every single government is going to come out with some gargantuan package to either break the link between gas prices and electricity prices, or cap those prices. And what's that going to do? That's going to soften the recession through the winter, and that's going to bring down inflation. Now, yes, that's going to store up sort of pain for further down the line, But I actually think, again, in this sort of race to the bottom of market expectations, I think this sort of wall of money, which is coming our way, is going to do an awful lot to soften that, at least in the near term.
But Ben, you're saying that basically fiscal support will come in if there is a deep recession. Who's going to finance that at a time where you're already seeing yields climb?
Yeah, absolutely. Yields probably climb a little bit further, right? But these are still very, very low yields by any historical context. And we'll see. We'll see how high yields really go if inflation keeps coming. If inflation, if I'm right that this inflation fever is breaking and inflation starts to come down, and economies keep softening. I mean, we'll see how high bond yields really go.
Ben Laidler of eToro. Thank you, Ben. We appreciate your time. Tell you what, yields have been surging already, particularly in the United Kingdom. At the front end, the 2-year just had its biggest monthly jump in yields. Lisa, on record for the 2-year in the UK.
And you've been saying this. At what point are we having a risk premium getting baked in because of this concern about a fiscal deficit that foreign investors just will not fund? When does this become an increasing concern that leads to calls for IMF bailouts and all sorts of things? There was a Financial Times piece just about that over the weekend.
Well, listen to the numbers. The plans coming out of the UK, Tom, now totals about 170 billion sterling, just like that. I think the number for consumers to freeze energy bills is 130. Then the other plan floated in the last 24 hours was a 40 billion sterling energy aid package for UK businesses. This stuff is adding up pretty quickly.
And again, for Americans who go deep into the United Kingdom, like the farthest north they get is Harrods, I would say, John, that we forget how small the United Kingdom economy is. These are huge numbers on a per capita basis. Again, I go to Citigroup, which did a tour de force note this morning. The cash call in the gilt market is a combined 8 years of previous commitments.
It's not like the pandemic when the bond market was wide open for this stuff.
Good point.
This is very, very different. Futures up 0.6% on the S&P. Coming up in the next hour, looking forward to catching up with Troy Gayeski of FS Investments. We'll do that in about 50 minutes' time. Live from New York City this morning. Good morning to you all. Good to be back. This is Bloomberg.
Keeping you up to date with news from around the world. With the first word, I'm Ritika Gupta. Liz Truss officially becomes the UK's next Prime Minister today after winning the Conservative Party's leadership contest, and she's drafting plans to aid households and businesses with their soaring energy bills. The proposals could cost close to $200 billion. The Justice Department is considering whether to appeal a judge's decision regarding documents seized from Donald Trump's home in Florida. The judge has granted the former president's request to have a special master, a neutral third party, review the papers. The judge, who was appointed during the Trump administration, also temporarily blocked the government from using the documents in its criminal investigation. A post-OPEC Plus rally has fizzled out. Oil fell a day after the cartel and its allies agreed to a modest 100,000 barrel a day cut. Further lockdowns in China are weighing on demand, so are higher interest rates and signs of a global slowdown. And Russia may face a longer and deeper recession as the impact of US and European sanctions spreads. Bloomberg has viewed an internal report prepared for the Russian government. 2 of the 3 scenarios in the report show a contraction accelerating next year. They see the economy returning to the pre-war level only at the end of the decade or later. And the drugstore chain CVS keeps expanding beyond its retail origins. The company has reached a deal to buy home health and technology services provider Signify Health for about $8 billion in cash. Other bidders included Amazon and United Health. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
What do Formula One cars and your local supermarket have in common? Well, strange as it sounds, they might both be using the same technology. A lot of innovation has trickled down from the world of high-tech engines, and it hasn't just found a new life in road cars. F1 cars have long been thought of as the peak of cool, and technology in them is also helping to cool down our produce aisles. Engineers from Williams are using their knowledge from 9 Constructors' Championships, working with company Aerofoil to help reduce the energy consumption of supermarkets. The device they're building is based on the design of an F1 car's rear wing. It attaches to fridges to keep more cool air in the unit. They estimate it can reduce supermarket energy consumption by 25%. One innovation from F1 is also helping hybrids reduce their carbon footprint. That's KERS, or the Kinetic Energy Recovery System. In common parlance, it's known as regenerative braking and works by storing energy of the car decelerating in a battery for later use. If that's not enough, F1 is now looking at TERS, or a thermal energy recovery system, looking to harness the heat produced from braking and the engine exhaust. That could allow cars to generate the same power using 30% less fuel. So while F1 may have a reputation as a gas guzzler, some of its innovations in the name of speed are helping in the everyday fight against climate change.
No one covers the world like Bloomberg.
We have to get interest rates higher and bring inflation back to our target.
33 million people have been affected by this flooding in the Amazon.
Disruption is the whole point of a strike.
With unmatched reach and resources from more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority. Markets countdown in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays.
The future of the entertainment business. Where do you think it's going? Do you think there's going to be movie theaters forever?
Anybody that says to you, and I won't name names, that says the movie business is over, are fools.
From the world of politics to the world of business. Balance of Power with David Weston. News, analysis, insight from and about politics power players. Weekdays. This is Bloomberg. When U.S. jobs numbers are released,
numbers are pretty much in line with what Wall Street expected.
Bloomberg brings you crucial data at terminal speed.
315,000 jobs created an optimistic number for the Federal Reserve.
And expert analysis.
Dare I say that this might be called a Goldilocks jobs report?
What this does is really push away a lot of the arch gloom.
Maybe leading us toward a soft landing. The Fed is still going to be debating 50 or 75 basis points.
Nobody covers jobs day like Bloomberg, your global business authority.
We need to show that we will deliver over the next 2 years. I will deliver a bold plan to cut taxes and grow our economy. I will deliver on the energy crisis, dealing with people's energy bills, but also dealing with the long-term issues we have on energy supply.
And we're starting to see the plans. That was Liz Truss, the incoming Prime Minister of the United Kingdom. Look at these numbers. This from Javier Blas just moments ago. So we've got 130 billion plus another 40 billion. So 130 to freeze household energy bills. That's the plan. 40 billion for small business. That's the plan. That's 170 altogether. That equals the annual NHS budget. And it's about 5% of GDP. Tom, that's a massive proposal from this incoming Prime Minister, and thanks to Javier Blas for that tweet moments ago.
Ratio analysis here, John, is really important. Very quickly, John, I do want to point out that finally renminbi near 7 yuan on a 2 standard deviation basis. We're almost there. We're just a little teens-weens away, John, but a 7 yuan is a real benchmark.
It's an interesting market this Tuesday morning. Let's whip through it briefly, Tom. Futures up by 0.8% on the S&P, on the Nasdaq 100, up 0.9%. Yields a little bit higher, up 4 basis points on a 10-year, 322.73. Euro dollar, let's call it unchanged. That currency pair up about 0.1%, Tom. Euro dollar 99.38.
A common feature of Labor Day weekend is Joe Matthew and I both quaff a 6-pack of Narragansett Lager beer. It is the beer of Rhode Island and of the Boston Red Sox. And the gentleman joins. How was your Narragansett Lager beer this weekend, Joe?
We like to call it the Baywaters where I come from, and sweet as ever, Tom. I'm glad that you're.
Oh, we could go on, but we don't have enough time. Well, I was in a fog over Narragansett Lager beer. I was trying to sort out a judge in Florida, Mar-a-Lago, the president, and buried in the reports, including the Washington Post and Bloomberg, is the Justice Department has the right to appeal. What will appeals court say to a single federal judge appointed by the former president?
Maybe I'll see you in the Supreme Court, which is
that
really
where this is heading?
This really may end up, because there are questions about, executive privilege. The court really hasn't come down on this exactly. Can the president, a former president in this case, invoke executive privilege against a sitting presidency? That's actually a big question that has yet to be answered. But apparently we are going forward with the special master, if only to slow things down. That can, in fact, be a legal strategy that we've seen before from Donald Trump. Remembering there was already a team doing this. This is the part where it's a little bit of a head scratcher. The so-called filter teams or taint teams that you hear about, they don't sound very nice, but they're made up of third-party, neutral members who can review these documents the same way a special master would. Donald Trump, though, of course, has no trust for that, and that's why you and I are talking now.
So to summarize this, Joe, for those that are benumbed by the weekend and getting the kids back to school, this will be a legal process. It's not about one judge making a final decision.
That's correct, absolutely. And we should also note that the review, that the Director of National Intelligence review of these documents to see if there are any, in fact, national security issues brought about by their living in a box at Mar-a-Lago for months and months, will continue. The case against Donald Trump, however, will be on ice while this special master is figured out. Also, if you can't just pick somebody and give them that job, the teams from the DOJ that got their hands on those documents at Mar-a-Lago had to receive additional security clearances, so they would just be allowed to read what they had found. Whomever is brought forth to be special master will also likely need that same level of clearance.
There's a bigger question here, Joe, and it stems from that Thursday speech with President Biden really calling out MAGA extremism, which is this reignites the Joe Biden versus Donald Trump, or Donald Trump versus anyone debate heading into the midterm elections. Is this working for the Democrats?
It's supposed to be advantage Democrats. Look, if you ask Joe Biden, if you ask the Democratic National Committee, if we could give you anything this midterm election season, what would it be? They'd want to run against Donald Trump, even though he's not on the ballot. But here we are. He may as well be on the ballot. And look at the rally that Trump held in Pennsylvania over the weekend. He is really helping to drive a lot of the discourse on the trail. The question is, how do voters clear through the muck? You've got inflation that's supposedly driving people to vote. You've got the aftermath of Roe v. Wade, which is very difficult to quantify and will likely increase Democratic turnout. And then you've got the whole Trump-Biden ultra-MAGA thing, and it's difficult to see how that weighs in as well. So we're in a bit of a confused time here as the general election really begins now post-Labor Day.
Joe, just quickly, before we let you go, there's a question about the support for backing Ukraine, but more importantly, backing some of the sanctions in Russia right now. How much support is there domestically to help Europe to continue waging some sort of counteroffensive versus Russia, given what's going on in Ukraine?
That support remains intact. I just wonder where we are in the winter. There are concerns about war fatigue. There are concerns about heating bills going up. Obviously, that's going to be a major factor for Europe. But how about in New England, where people are preparing to fill the tanks with heating oil this winter, and they say, how long have we been doing this again? How many billions have we spent on weapons? This is going to be a messaging challenge for the White House to keep American voters on board while they try to keep the alliance abroad together.
Joe Matthew, thank you, sir. Looking forward to the show a little bit later. Sound on Bloomberg Radio, weekdays at 5 p.m. Eastern Time. And just to build on that, Lisa, I know you're on top of the European story too. How do you keep European allies on side and the European electorate within some of these countries on side with this, with the pain that's starting to build?
Well, you're not in a number of places. In particular, in Italy, there was a poll that both of us were looking at over the weekend from Italy showing that 51% of those polled did not support the sanctions on Russia at this point because of where heating prices were going. At what point does this become something more mainstream and really start pushing back against some of the approaches? And this isn't necessarily the majority yet, but it has to be on the margins what a lot of politicians are dealing with.
Energy bills in Italy, Tom, they're facing a 91% jump in power prices from a year ago. The team at Bloomberg News did a wonderful job of breaking this down country by country over the weekend. German electricity jumped 185% in August from a year earlier. They're the numbers, TK. They are big, big figures.
As Greg Villiers says this morning, John, and it's of course hugely true for Europe all, it's a war. And I think one of the quiet stories off the American radar this weekend is the war grinds and continues.
It's the sanctions in response to that war, Tom, that have driven these big, big issues in the energy market. And to Lisa's point, can you keep the electorate, the whole of the electorate, on side as things get harder through the winter?
Folkert's Landau, February 24th of Deutsche Bank. There's going to be a massive fiscal impulse. What's it going to be? Energy costs, rebuilding, et cetera. The fact is, there's going to be a major fiscal impulse across Europe.
And the question we're asking this week, Bramo, is whether this bond market is wide open for that kind of large-scale fiscal relief we're discussing.
Who pays for it? At a certain point, we're looking at a huge fiscal response at a time when funding is not free. What were you saying, Tom?
It gets paid for, and the leakage is foreign exchange and inflation.
Weaker currencies, Tom, higher yields. And we're seeing that in the UK. We're seeing that in Europe too. Bruce Kasman of JP Morgan is going to weigh in on some of this stuff. We'll join him a little bit later in this program. From New York City, this is Bloomberg.
What do you think of when you think of a battery? For most, it's what we use to power devices for both work and play, and maybe even your car. Over the past few decades, they've gotten way more powerful, long-lasting, and affordable. But all of this is just a prologue to what the next batteries are going to do.
As we drive to an increasingly renewable power-driven grid, we also need to be able to store energy and release it later to cover those periods of weather intermittencies that are driving this new grid that we're in. It's a multi-trillion-dollar opportunity, and it's imperative that we figure out the solution here.
How we store energy on a massive scale is in many ways the central challenge of the fight to stop climate change.
I'm
Kaylee Lyons.
And I'm Damian Sassower. Join us each week on our brand new show, The Lineup. If you're betting on the Mets, it's a pretty good return.
We'll cover the latest trends in sports betting, the hottest matchups, shifting spreads, and the data you can't find anywhere else. It is crazy how much the money line has changed from the preseason to now.
Plus, expert insights from special guests.
The Eagles got a gem on their hands. I hate to say it because they're in the NFC East with the Giants.
Odds are it'll be your favorite way to stay in the game.
Catch The Lineup Fridays and Saturdays only on Bloomberg.
Third week of losses on the S&P 500 last week from New York City this morning. Good morning. We're bouncing back a little bit, up 0.9% on the S&P. On the Nasdaq 100, up around about 1 full percentage point. Mike Wilson of Morgan Stanley out in the last 24 hours, cutting his earnings estimates, and now saying that the minimum downside for this market, and he said this a few times, could well be 3,400 on the S&P, and we could see that in 4Q. That's the equity story. Here's the bond market picture for you. 2s, 10s, and 30s. On Friday, a lot of people called this a Goldilocks jobs report. Participation improving. Unemployment a little bit higher. Wages a little bit softer. Still robust payrolls growth. So we took out some of the work at the front end. Yields lower. We built it back in this morning. Up 6 basis points. The overwhelming takeaway at the end of the day is that this Fed has more work to do. 344.72 on a 2-year right now. In the bond market over in the UK, yields have been absolutely surging. Unwinding some of the moves this morning at the front end and sterling bouncing back, but I just wanted to frame things over the last month for you, the last 30 days or so. Sterling is still weaker by about 4%. Cable's at 115.87 right now, but yesterday morning, 114.44. Yeah. The likes of City talking up maybe 105, 110 on cable. It all hinges, depends on what happens with the Fiscal Relief Act from the incoming Prime Minister Liz Truss, how big it's going to be. The numbers we're talking about right now, £170 billion worth of relief to help energy, businesses, to have the energy side for businesses, and to provide relief to consumers too, Tom. That's about 5% of GDP. That's a big, big package.
Absolutely dead on, but I really want to emphasize, and there's a wonderful essay in the FT today driving this, people looking at the larger, broader, real income effects. I'm not going to give a course here, but the answer is they blow sterling through parity, which is unimaginable at this point.
How do you finance it? And you and Lisa were talking about that. Tom, you said a weaker currency. Lisa's talking about high yields, and we've seen both. Right. We've seen both over the last month. Yields at the front end over the last month up by more than 100 basis points. And the team at Bloomberg just breaking the numbers down. The biggest monthly move we've just had through August. At the front end, yields higher on record. Right. 315 right now on a 2-year, Tom. I believe the Bank of England meeting about a week or so away.
And we're focused on the ECB here. When is it, John? Thursday's ECB?
It is Thursday, September 8th.
Absolutely stunning. That will not be a snooze fest, to say